Interledger really is the bridge that will actually connect these worlds of fiat and worlds of XRP. And so importantly, because Interledger is in essence currency agnostic, it gives you the option to very easily tap into XRP to take advantage of the speed and the low cost of those payments. And so if you think about it, what Ripple is doing is Ripple is bringing the power of XRP to enterprises through RippleNet software, and we're bringing the power of XRP to developers, to the global network of developers, through Interledger protocol. And so XRP Ledger, it's unbelievably cheap. You can send a payment of almost any size for less than 1/100th of a penny. 100? Got the right decimal points there. Extremely cheap to send money around. It is exceptionally fast. You can send that exact payment in 3 seconds. And importantly, XRP is very, very liquid. What is Spring? Spring is built on open standards. Spring is built with open source software, and Spring builds upon open networks. A platform. This is a platform for developers. This is a platform for many of you that are here in the room. And what we aim to do is we aim to provide tools, services, and programs to developers to make it easy to build on technologies like XRP and blockchain. And then money. We all like money. When we think about, at Spring, when we think about money, we don't just think about XRP, or we don't just think about cryptocurrency. We think about all the money. In fact, we had a hackathon yesterday here in partnership with Blockchain at Berkeley, and our t-shirts actually said, hack all the money. And so I think importantly, if you're thinking about all the money, what does it mean? You have to start with fiat. You can't think about all the money if you're not thinking about fiat. The world operates on fiat. And so Spring is really a platform for thinking about all the money, fiat, and of course, obviously, cryptocurrencies, which have a great role to play in building the Internet of Value. And finally, we think that looking at what's going on with innovation in the blockchain space, there's a lot of tokenization of any asset. There's a lot of new representations of value that in essence look like money as well, and we want Spring to be able to work with all of these.
Another one that it got some attention, but I particularly am very excited about, is we added the Saudi Arabian Monetary Authority, the Central Bank of Saudi Arabia, as a customer of Ripple's. And they joined Bank of England as a customer, as a central bank engaging with us. And that also has really great secondary and tertiary impacts in working with the ecosystem throughout the Middle East. And so
it's more than a stamp of approval. They've got the connections on the rails there in the Middle East.
Right, and they see that we're moving from an analog to digital nature in terms of cross-border payment flows, and they obviously leaned in and joined with us. So,
again, to tell you a story, 3 years ago, we actually experimented with 12 banks across different geographies who did not have pre-funding relationship with each other. We gave them a bunch of digital asset called XRP and asked them to use it to see if it works for cross-border payments as a bridge currency. They came back to us after 6 months and they said, look, it works beautifully, but we cannot use this. And there are 2 issues with this. Number 1, it's highly volatile, so we cannot use it. Number 2, my regulator will never allow me to use this. There is no risk weighting to this, and it's too volatile. There is no way the central banks will allow me to use this. This was in 2015-16. So what we did was, and this is 3-4 years ago, before the whole concept of stable coins came into being. So we went back to the drawing board and came up with a new product, as I mentioned, ODL, on-demand liquidity. And basically what that product does is, through that product, banks do not have to hold a digital asset on their books. They could leverage that product, connect with a digital asset exchange, which, mind you, is fully licensed and supervised, and then leverage that exchange to source liquidity in real time. And because the entire transaction happens in less than 30 seconds, because of the speed of the ledger, the volatility risk is taken care of. So we removed the 2 big concerns that banks and payment providers had and almost productized it in a way, and then we launched the product last year in October.
Over 100 clients, primarily financial institutions, companies like Western Union, MoneyGram, Bank of America, Bank of Tokyo, a lot of really big financial institutions, and we feel very lucky. Yeah.
I bet. But before this panel, too, we were talking about the story of Ripple and how you came to be. And what's really interesting is that you didn't arrive at this payments aspect right away. So can you share that story of how Ripple became a payments-focused company and relate that to kind of the journey of what a startup would go through trying to figure out their own use cases for blockchain?
Totally, yeah. So we did not start as a cross-border payments company. We actually started as a company called Ripple Labs. We were kind of figuring out what we were doing. Basically, what we started out with was a commitment to understanding this open source blockchain technology, this thing called XRP ledger. I think where we started was really understanding what is this type of technology really going to be good at? What are kind of the critical, unique capabilities that this had? And then let's just figure out what you can do with it, and then what is the best thing to do with it? So I think we understood pretty early on that this type of technology, it's really good at transferring value and exchanging value. There are a lot of things that you can transfer, a lot of things that you can exchange. So we looked at things like the securities market, so think about like stocks and bonds. We looked at the commodities market, moving precious metals. We looked at loyalty points. We talked to a lot of loyalty points companies. We looked at domestic payments. So I think I had my first conversation with a central bank in early 2014, just a couple months after I joined. I was a little surprised to have that, but pretty cool. And what we concluded was that cross-border payments, which was one of the kind of strands of spaghetti that we threw against the wall and it stuck, it was really the use case where we believed there was a lot of friction, meaning we could make a really big impact. And it was also a use case where we could make a big impact in a relatively short amount of time. All of these possibilities were super interesting. I think they were all valid, but they just weren't as big and weren't as near term as cross-border payments. That's where we landed.
The thing is that nowadays there are a lot of innovation offices at big companies focused on blockchain. Basically, they have a mandate, or you have to do some sexy blockchain projects. And they just satisfied with doing something, it's more like shiny object that can bring some media attention. But then that's it. In order to really get it used in the production, you really have to talk to people who are doing the actual business. So when we sell our products, maybe a few years ago, we had to go through innovation office, which is such a long process. Finally, like after a pilot, you can get to the actual real business people. But now, today, because we have so much traction and also track record, we directly go talk to like the transaction banking people who really understand that business. So just keep innovation office, that's the settlement piece, and then also liquidity problem. We realized that for settlement problem, we don't really need a public blockchain. Instead, what's more important is the interoperability between multiple ledgers, because it's very unrealistic to assume that everybody will be on the same ledger, like a public ledger. Instead, it's okay for different banks to have their own ledgers, but providing the efficient way for them to be able to exchange value across multiple ledgers is really important. And that's why we came up with a technology called the Interledger Protocol, what we call ILP. And you will probably see more of this name going forward, but basically it allows the financial institution to use the existing infrastructure, but use this new protocol, ILP, so that they can transact with each other. And ILP is kind of equivalent to TCP/IP. TCP/IP really allows you to exchange data between different databases. ILP allows you to exchange value across multiple ledgers. And then the last piece, the liquidity problem. For this, we use a public blockchain called XRP ledger. That is basically allows you to secure on-demand liquidity without.
And then standards, we think standards will be important. Most of that's going to be private, but I think this is where central banks can have a big impact. And the good news is central banks in many countries have been very constructive.
Yeah,
when you look at what the Fed has been doing, when you look at the Bank of Canada, the BOE certainly has been super far in front. Bank of Japan has been engaged, so monetary authorities of Singapore have been engaged. So there's a lot of good things happening. I think PBOC as well has been really engaged. We've got a number of PBOC delegations through here. So there is a lot of discussion going on, and that will be important.
Interledger-ը պրոտոկոլ է, որը ստեղծված է, որպեսզի ledger-ները, բոլոր ledger-ները հնարավոր լինի իրար միացնել։ Երկու բառ ասեմ, ինքը ինչ ստատուսում է գտնվում, մոտավորապես ինչ վիճակում է հիմա։ Ինքը բաց պրոտոկոլ է, անցնում է ստանդարտիզացիայի պրոցեդուրաներ W3C կազմակերպությունում, որը գիտեք ինտերնետի ստանդարտներ ընդունող մեծ կազմակերպություններից մեկն է։ ունի շատ խոշոր համակիրներ, հարյուրավոր համակիրներ, այդ թվում Ամերիկայի կենտրոնական բանկը Federal Reserve-ը, եթե գիտեք, ամերիկյան մեծ բանկեր, ասենք Wells Fargo, tech գիգանտներ, որոնք շատ մեծ ծավալի վճարումներ են ստանում, ասենք Alibaba եւ հետաքրքրված են նմանատիպ պրոտոկոլների մեջ, blockchain-ի հետ կապված ընկերություններ, ովքեր աշխատում են blockchain տեխնոլոգիաների հետ եւ այլն։ Այսինքն ինքը արդեն գոյություն ունեցող մշակված հիմնական մշակումը ավարտած պրոտոկոլ է, որը հիմա սկսել է մտնել կյանք։ Այսինքն սկսել է ինչ-որ մարդիկ գտնել, ովքեր կօգտագործեն իրանց աշխատանքի մեջ դա կներմուծեն եւ սենց ինքը այդ կյանք մտնելու process-ում է գտնվում։
I think we also sort of crossed an important threshold. If an asset doesn't have value and it doesn't have liquidity, you can't really use it, even if it has the properties that are perfect for your use case, simply because you can't get enough of it without moving the market. And I think we crossed a threshold where there is enough value in XRP now that you can use it to make payments and you can use it as a store of value. And I think that also caused an uptick in interest, and so people started looking at, well, what is this? What are its properties? Who's behind it? What are the use cases? And I think people are seeing now the technical superiority of our design, the team that stands behind it, the amazing array of partners that we've managed to align with us. And I think they're starting to realize that we are going after these use cases aggressively and that they can actually just use XRP for many of the same things that they would traditionally use Bitcoin for.
If we look at the kind of the cost calculation, this is kind of some fictional numbers, but it's correct in terms of the order of magnitude, right? So you have Bitcoin, you have Ethereum, you have XRP, you have Swift. And so our algorithm basically goes in and it tries to select the best option. And so people often ask me, like, why does Interledger help XRP? Or why are you guys working on Interledger as a completely neutral protocol when you're actually have this vested interest in XRP? And well, the reason is because XRP is right now by far the best digital asset, but it's not being used as much as Bitcoin, for instance. And so in order to close that gap, we want to get to a point where the selection of assets is kind of automated and you have algorithms that just pick the best one, in which case right now XRP would get picked all the time. So that's why we have such a vested interest in just enabling more efficient selection.
We're not afraid of a level playing field. As Stefan said, we think we can succeed on a level playing field. But also, you can get people to build a level playing field. It's very hard to get other people to stand behind something that has a built-in bias in favor of one company. Twitter doesn't mind the fact that the internet wasn't built for Twitter. Facebook doesn't mind. They like the fact that there's an open platform that everybody can support and use, and they're willing to compete on that level playing field. And if they lose on that level playing field, so be it. Somebody else will win, and the world will be a better place for it. We believe that we have the advantages today, and we believe that we can get the industry behind an open standard that facilitates these types of instantaneous payments. Obviously, we think the price is going, if we succeed, we believe that's going to put upward pressure on the price. And if we fail, well, we're going to fail no matter, if we fail, we fail. It is what it is.
And all the digital asset is doing is just shuttling between those different pools of liquidity. And in those pools of liquidity, you have market makers, hedge funds, speculators, traders that are providing the price discovery against the underlying digital asset.
Currently, we're members of the Web Payments Working Group, which has recently put out its first recommendation. It's currently being implemented by Safari and Chrome, and Internet Explorer and Firefox. And as part of that effort, we're actually one of the two co-chairs. As part of that effort, we've been thinking about what is the next step. Right now we're trying to make how can we make credit card payments better on the web. And I think one of the next steps will be how do we integrate Interledger payments into this. And then if you go even further, it's how do you integrate sort of autonomous payments into the web. So
once you get sort of this technology embedded deep within the financial infrastructure, then I think you start to see a path to retail adoption. If banks are sending and powering their payments through digital assets, well, there's a clear path then for banks to provide accounts for digital assets with insurance behind them and so on and so forth. And then there's a path for, consumer rails to start being really rolled out. I
think that's another reason that XRP can succeed in a level playing field. There isn't really another asset where there's this company that has a war chest of that asset that they can use to increase its liquidity without having to increase a known fixed supply. So it increases the circulating supply, but presumably that's known and already figured into the value. So it's not like that's going to devalue it as much as a sort of variable increase in the supply of an asset.
What do you sort of expect from blockchain digital assets next year and maybe even in the next 10 years?
Yeah, so to the point about Wall Street and some of the, I guess, evolution there, I think in the next year or 5 years, I think we will see more traditional banks legging into the space a little bit more aggressively than they have in the last 12 or 24 months. Not just on the blockchain technology side, so not just using blockchain technology to improve efficiencies on, say, trade settlement or reducing fees around broken trades, etc., but actually thinking about using digital assets, building sales and trading desks, building custody platforms, building prime brokerage platforms, full service suite offerings around digital assets. In addition, I think we might see central banks with greater adoption rates around the concept of using digital assets as reserve currencies. And then I think we will see derivatives markets start to explode in 2020 and beyond. I wouldn't be surprised if we saw the derivatives markets outpace spot by 2x by the end of 2020. And then to an earlier point I raised around some of the activity we've seen in consolidation on the exchange space, Binance as an example I cited, I think we'll continue to see much further consolidation on the exchange side and within the OTC universe, and we'll start to see clear leaders emerge within the space.
And taking advantage of that crypto currency framework, what we are going to do is the same thing that's available in a number of markets around the world. As you know, today banks, when they fund, they keep nostro accounts with other institutions. And we estimate there is about $5 to $10 trillion that's stuck of depositors' money that's lying elsewhere around the world with capital risk, depreciation risk, and all the things that go with it. And that's the reason remittances are too expensive. But if you use cryptos to do just-in-time settlement and just-in-time funding, that $5 to $10 trillion can come back home, reducing the cost for financial institutions, which in turn can make remittances cheaper. Because otherwise, the World Bank goal of bringing down the cost of remittances from 8% to a below sub-5 number would not be achievable. But with on-demand liquidity, that means using cryptos to fund it between two licensed exchanges is the best way to go.
No, we've seen some really, really interesting use cases come to light over the last 6 months or so for Ripple's tech, and it's around PSPs, acquirers, being able to settle merchants much quicker using Ripple's technology. So that kind of, being able to settle per transaction is potentially something that could open mass opportunities for merchants in terms of cash flow. But not only that, we've seen big marketplace players that are able to keep sellers on their platform by offering them a diverse payout method, i.e. upfronting the cash using Ripple's tech in real time rather than waiting 3, 7, 10 days. And that's been able to give them a strategic advantage over other marketplaces that are offering, much poorer timescales of getting payments out. And I think that those kind of use cases are something that we're really interested in. Supplier payments, on-demand payments, is kind of where we see Ripple really making headways in 2019.
Cassie, Robert told us that he sees one use case of Dash in being international remittance, but this is also the use case for Ripple. What do you think is better, Ripple or Dash for international remittance? And why?
I think we're focusing on two different markets. You're kind of focusing on the consumer market. We're focusing on enterprise software for businesses. We have financial institutions transacting a lot of cash through Ripple's ecosystem now. Focusing on, we have 40 countries live, but the emerging markets are a real strong point for us, so Southeast Asia, India, etc. It'd be wrong of me to sit here and say, hey, Ripple's better than Dash, but there is definitely a market for both of us. There's definitely opportunities for both of us, and we'll continue working very much in the enterprise solution space.
I mean, we are talking about maybe 5, 8 years in terms of the whole market getting developed. Capital markets take much, much longer time. And this market, of course, will develop much more quickly, but the liquidity needs to deepen, a lot of instruments need to be traded, and once it is, the volatility will come down automatically, right? And then the questions around stability, the question around being usage around the banks will automatically go away. So think about it, if banks were to come on the platform, automatically the markets need to be deeper, and they would also contribute to that deepening of the market itself.
What's exciting is that we just got notifications of Ripple's net upgrade to InstaPay and Pay to Card, which are two additional features. One, it makes it even faster to go through RippleNet to get to our recipients. It's something that we've been excited about, and now it's available. I think that feature is going to be one of the, if not the most impactful features for RippleNet in that region. And then Pay to Card is great. So now if someone is out at the grocery store, they can, and they're getting paid through our system, we pay them for their weekly pay, and then immediately they have the money on their card.
The whole idea of pre-funded both show and no-show accounts with actually XRP as opposed to other fiat currencies.
Yeah, I think in 18 we see it start happening. Certainly that's our vision, that's our goal. There's some concerns around security and custody. Right? Today we don't have any enterprise-grade custodians yet, but we're getting there. So you need that. And then you need tools for hedging. Right? One of the reasons that liquidity is important is because it allows then people to hedge risk. Right? We're getting there. Right? So you need those three things in order to really get that use case. We can do some things to mitigate those challenges. The XRP helps. Right? So we can loan it, we can bet options, we can look to structure interesting derivatives, right, where we're the counterpart. The regulation is really the challenge. But I think in 18 we'll see it. I think in 18 we'll see, I'm not going to say it's 100 banks, but I think we'll get to a point this year where we'll see a few banks using XRP in real bank fees.
And also, do you think XRP has a future of being a bridge asset for digital assets?
Oh, definitely. Yeah.
Besides just the fiat idea?
Definitely. In fact, some of the market makers that we work with now, they use it to close arbs. So, if there's a huge arb on one exchange because somebody's selling, a large amount there, they'll convert out of whatever fiat or crypto into XRP, move it over somewhere, and then sell it there. So it's happening because it's faster.
Okay.
Yeah. So,
thank you.
When you think about the fourth industrial revolution, this is all about the web merging together with the physical web, merging together with sort of the human web, if you will. I would add another one to that, and we would call that the Internet of Value. So think of, in terms of where we're going, of billions of devices, which are not only internet connected, but actually hold small amounts of value. So they can literally be economic actors themselves. So our phones, our cars aren't just trading information. They're actually trading payments and money with people and with each other and with companies. That just really opens up the scope of where our global economy is going. So we think this is sort of a key part of the puzzle of trying to make this fourth industrial revolution as positive and productive for people. Right now, because the world is a series of siloed networks, you need correspondent banks in the middle as a workaround. 1140, that's 1970s technology. That's what creates these incredible delays in moving cross-border payments, the incredible cost, and sort of the uncertainty of what happened to your payment once you send it globally. So that is a part that we think is fundamentally changing. However, I think the benefits of that improvement far outweigh anything that might change with the existing system, and actually will provide way more opportunity, not just for new startups, but for the banks themselves. You can imagine a scenario where those 50 billion internet-connected things, devices, whatever you want to call them, literally now have bank accounts and could be customers of banks. So you could argue that billions of new customers will be coming online to the players in the finance stream. It's all about adopting this new technology, keeping up with change, and then reaping the benefits from it. I think what consumers, through their banks, are now going to have services where money can be sent cross-border instantly at greatly reduced costs with sort of maximum competition for the foreign exchange, for example. It's going to open up new avenues for small and medium-sized businesses, which in many ways sometimes are blocked from the global marketplace simply because of the lack of access to efficient payments. Second part, long term, you've got 5-10 years in this sort of Internet of Value that we're going into. Once the exchange of value, those costs and time go to zero, you now have all kinds of new applications that simply were not possible in the old world in exactly this kind of the same way that the internet, as we've known it over the last 20 years, it introduced applications that we could have never imagined. And that's very exciting. So we think that's going to provide all kinds of yet to be determined benefits to consumers. So there's a now impact of all the things we do today, and then there's a huge impact of the things we can't even dream about.
Different governments need to work together to understand that.
Do you see that happening? I mean, given sort of, there's a lot of polarization in
Starting, for sure. I think it's actually starting. I think there's less polarization around the issue of cryptocurrency than people really, than we see in other areas of geopolitics.
Right, Madame Lagarde of the IMF has been publishing for 2 years. I've been quoting this for the last 2 days, but she was quite famously at the last Davos convening published quite openly that she believed that decentralized technology and distributed currencies and cryptocurrencies are a real opportunity to redistribute wealth and participation to frontier and emerging economies. I think it's important. And she also said we have to understand that to ensure the typical financial security and stability that we're used to, we have to make sure we have the right regulation without restricting innovation. And of course, it's always difficult to draw that line.
Ripple employs someone like me so that we can work and engage with central banks and policymakers. So I, for example, have already engaged with around 30 plus central banks in Middle East and Asia Pacific, working on the regulatory side, policy frameworks, and then educating them, collaborating them wherever required. What we are also seeing, especially in APAC, a lot of countries created this concept of sandbox. So Ripple initially was working with banks within the sandbox, but once the policymakers were confident and could see the value add, basically all the banks exited from the sandbox. So that is one way of regulating this market. But I think more and more, even the global bodies, so BIS, IOSCO, FSB, have clearly said recently that they don't see many risks with DLT. The crypto asset side, digital assets, is a whole different game. And there also, to be very honest, we are seeing some positive sentiments coming out from global bodies. So recently the G20 in their March conference and also very recently came up with some very positive comments. The IMF came up with some positive comments, and we are now seeing more and more countries, especially in emerging markets, come up with regulatory frameworks that are working with these banks and these cross-border payments. I think everybody was super happy with the results they were seeing. But what was missing was the whole governance piece. So in the decentralized world today, there was no governance rulebook which banks could then comply with. So what Ripple did was actually we created a rule book from scratch. So we worked with top 6 banks globally and also hired a former attorney from the Federal Reserve and then created a rule book from scratch, which all our RippleNet members are supposed to comply with. And this rule book basically touches upon topics like dispute resolution, messaging format, delays, and all the classic things that you would expect in a centralized world. So that is actually one of the value adds for Ripple, which at least in my limited knowledge, nobody else is doing. So that really differentiates Ripple from some of the other companies out there. And I think more and more as we see adoption of DLT and blockchain, I think governance will play a very important role. So I think startups, banks, all of them will have to start thinking about how do you create a governance framework for DLT's mass adoption.
There are lots of institutions that are just, in my opinion, chomping at the bit to dive into all this, but they need to understand what the regulatory framework is for them. It's too much risk on the one hand, and to really dive in until they hear from the regulators, these are the rules of the game. And I think in New York, the proof is in the pudding. We've seen big institutions diving in because they know what the rules are because of the BIT license, and because they know the companies that have the BIT license can be trusted. They have a regulator that comes in and watches over periodically what they do. So I think one, we'll see more regulatory clarity. I think that comes in the next 1 to 2 years, hopefully 1. And then second, I think the level at where we're regulating is probably going to rise. I remember being in an elevator sometime in late 2015. A gentleman who I'll politely say was probably of the libertarian streak, shall we say. And he got in my face a little bit in an elevator after a speech I'd given and said, "Who the hell are you? Who the heck are you? New York regulator to be regulating the world's digital assets." And first of all, I was just happy he hadn't taken a swing at me. And he's a pretty big guy. And I said, look, you're right. I said, it should be regulated at some point at a higher level. It's global, it's borderless. But until somebody does, you're stuck with me. And he sort of backed off, and I still sort of feel that way. And I think over time, you will see global regulators, and we're already seeing interest from global regulators who are thinking about this. I think Libra has definitely had a lot of different effects, and people have many opinions about Libra. But one thing it's done is gotten the attention of global regulators in this space. And I think ultimately you will see regulation become more clear and then also rise to a higher level. Look, I think RegTech companies are an incredibly important part of the system now. And the best example I can think of is, obviously, if you're going to operate in this world, you need to have a serious anti-money laundering KYC system. And it turns out that the AML KYC systems that the world's largest banks have are often, not very good, and they run on very antiquated technology. And what we're seeing, I think, is you're seeing startups being more willing to work with RegTech companies to help them meet the obligations that things like the BitLicense have upon them. And so I think over the next year, what you're going to start to see, and I can say this about Ripple, you're going to see startups have, frankly, better AML KYC than the banks do, because they're more willing to use newer companies' technologies, whether it's machine learning driven or otherwise, to do a better job when it comes to AML KYC. And it's, to me, frankly, troubling that there's so much resistance at the largest financial institutions in the world to really update their systems. Is it hard? Yes. Is it expensive? Yes. Is it asking them to sometimes deconstruct a system they're used to working with over many, many years, and with vendors they have deep, deep relationships with? But I think there's a reckoning coming. Regulators are catching up, and they're seeing that rather than always rap banks on the wrists for doing poor AML KYC, and I was one of the people that did that as well, but what regulators should really be doing, spending some time on, is ensuring that the systems that the banks are using in the first place are adequate, are set correctly, and are modern, and using the latest technologies to do the best they can do. And I think, in a way, companies like Ripple and other fintechs are going to lead the way in that respect, and hopefully that will create upward pressure on the entire industry.
At the same time, you have a lot of financial interest coming to this where people want to invest in it. Institutionally, I feel like the institutions are just waiting with their faces in the window, trying to get into this thing, and waiting for some of these important issues around custody. I think there are important accounting issues as well in terms of banks and the way that they count the assets that they hold in their books. Capital requirements are so important to banks, some more than others. If this doesn't get counted as capital because their accountants because GAAP accounting doesn't yet allow for that, that's also, I think, a hindrance to this industry. But I think that those things do get solved sooner rather than later.
God, I really wish I could answer that, but I'm under a non-disclosure agreement with PolySign, and because they're in stealth mode right now, I don't know what I'm allowed to tell you. Okay. I can tell you that they're in the custody business, and of course I can tell you that they're doing it like an amazing way, that Arthur and I are behind this, we're the lead guys on the technology, and obviously like we think we're doing it right, but unfortunately, I don't know what. I really wish I could tell you because it's so freaking cool. I'm busting with wanting to tell people what we did, and they're like, "Oh no, we're still in stealth mode. It's still non-disclosure." So unfortunately, I cannot answer that question, but I feel really bad about it.
At the same time, you have a lot of financial interest coming to this where people want to invest in it. Institutionally, I feel like the institutions are just waiting with their faces in the window, trying to get into this thing, and waiting for some of these important issues around custody. I really
wish I could tell you because it's so freaking cool. I'm busting with wanting to tell people what we did.
So here's one about Canada, actually. So one of our viewers is interested in learning more about Ripple's plan in Canada. So let me talk a little bit about how we choose which markets we bring on-demand liquidity to, just for a little bit of context. So on-demand liquidity, again, is really serves to solve the pain point of sending low-value cross-border transactions. So we do take a look at where are the flows today, like how much money is being sent into or out of a particular market, to help us to address and prioritize the different countries that we're interested in. In addition, we take a look at the infrastructure for XRP, whether or not we have good digital asset exchanges and liquidity in those markets, and how robust we think the offering can be. And then primarily, we're looking for customers who tell us that they're interested in either receiving money into particular markets or sending money from particular markets. So this question will go into our vault of noting that there's interest in Canada. Canada is a great market. We feel that there's good regulatory clarity there. There's good partner interest in sending out of Canada in particular. And so that market is certainly on a short list, and we'll get back to you with the exact times that Canada might be available.
Let's put to rest some notion that XRP payments are slow on AnyPay. Let me demonstrate how this works. On the right-hand side, we have AnyPay. This is what's installed at many cash register systems in retail businesses. Over on the left, we have my Ripple wallet, XRP wallet. Okay, so say I want to collect $1. I'm going to select XRP as the currency I want to collect. Now, an XRP mobile wallet would be able to scan this, but I'm just copying and pasting because I'm using my desktop wallet to show you guys how this works. It would automatically pre-fill the destination tag and the amount and everything from the QR code. So I'm sending 2.65106 XRP, and watch, it takes a few seconds to confirm on the Ripple network, and then instantly it will say paid on AnyPay. So super fast, like less than half a second. Once the XRP ledger validates your payment, will it be shown on AnyPay? Then the money went right into the business account. So there you go. XRP is fast and great, and AnyPay is the best cash register for cryptocurrency, hands down. Check it out.
I'm going to give you a little overview of GSR. We are 35 employees. We started in November 2013. We started being primary market makers for Ripple, and since then we've provided market making services for exchanges, token issuers, and we've also, what we have right now, it's a company that serves not only providing liquidity to the market, but also sourcing liquidity to the market. We have an OTC desk, and we execute programmatic selling, buying, or programs to our customers. In many occasions, we find ourselves with customers that come to us. They have advised ICOs. They are ICOs, founders, or whales with large amounts of tokens, and they cannot get out of their positions because the market is very illiquid. It's very hard to find a buyer for an OTC side or a big size of an order on OTC. So the only way to get out of those illiquid positions is by executing programs with bots on the market. We were one of the primary market makers for Ripple, and what we've seen in the market recently, in recent months, is that new exchanges pop up. New players come in. These new exchanges try to gather attention from the market, because we all rank the exchanges in CoinMarketCap by volume. We all try to see who is the highest volume in the market. Those figures are, in many occasions, not real. We see lots of fake volumes in the market. Exchanges are finding new creative ways of incentivizing volume makers. That is not very different for market makers. Market makers are providing liquidity, and liquidity is very different, or it's different to doing wash trades.
5 years, where are you?
Well, I think the overall crypto community will continue to grow at really impressive rates. In 5 years from now, I don't know exactly how to think about that, but I think within crypto world, I think Ripple will continue to grow and take market share. But that will probably be, we're focused on cross-border payments today. I think we'll look at other use cases, as I kind of alluded earlier. And I hope that in 5 years we've got we're not just Amazon Books, but we are Amazon. I think we'll look at other use cases, as I kind of alluded earlier.
You, for Ripple, building a platform that could perhaps substitute XRP for a Fed coin one day, or
we think
some
about
other...
The XRP ledger as an open source technology, we think about how do we make it really useful for the customers we work with. We also think about how do we make it extensible and how do we participate in that open source community in a way that makes it extensible to other types of customers. But could central banks? Sure, they could use aspects of that.
Could it be more efficient, what they create one day?
Yeah, and that ultimately is the underpinning I think we all focus on. How can we make this more efficient for our customers? And right now the customers we focus on are commercial banks, payment providers. We certainly are thinking about other types of customers we could serve. I have made the point, I don't know if I've ever said it on air, but I've made the point that in the earliest days of Amazon, it's called Amazon Books. It was a bookseller. It competed with Barnes & Noble, competed with Borders, and when I think about Ripple today is viewed as a cross-border payments company. We view ourselves as a blockchain infrastructure company. The first vertical we've done is cross-border payments. We want to make sure we're winning in cross-border payments before we do another vertical, but we will certainly do other verticals leveraging these technologies.
So you're open potentially in the future at some point to using the Fed coin or the OneCoin. I'm pushing because the head of blockchain technology at JP Morgan told me if the Fed came up with a coin, they dumped JP Morgan coin. So I'm asking you whether you're open to the possibility of...
Sure. I mean, I think I'm very open. Even if the Fed in the United States is using a coin, you still have a cross-border settlement dynamic where if you have central banks around the world using their own digital asset, I don't think it changes the need for a cross-border neutral
something in the middle, like an XRP.
And XRP has been extremely...
Yeah, so Ripple is a software company. We're purely technology. We consider ourselves a software company specializing in global payments, cross-border payments. What we do is we provide software to financial institutions. So we work with banks like Bank of America, Santander, Bank of Tokyo. We work with non-bank financial institutions like Cambridge Global Payments, Earthport, Instarem. These are all non-bank cross-border payments companies. And we strictly provide software to these companies to make the movement of payments cross-border more efficient. Some of our solutions leverage blockchain technology. Other of our solutions leverage cryptocurrencies, digital assets.
Liquidity has a lot of components that are important to kind of address. So one of which is immediacy. So I think about that as how quickly can I get access to markets and how quickly can I trade into and out of this asset or token for another asset. I think about the breadth of the market. So breadth is sort of how you think about the trading volumes at different prices in the order book. And then depth of the market. And depth of the market is really about how many orders there are close to exactly where the price is currently trading of varying sizes, which would imply that you could get a lot of volume through without having much price movement as you're trading into and out of the asset. And then in addition, accessibility is very important. So accessibility is just probably as it intuitively sounds, the ability to access markets to trade in those assets very easily. And that can be geographically or through multiple infrastructure partners, whether it's exchanges or OTC desks or what have you. And the last key attribute of a healthy liquid market is really resilience. And that is getting at the ability for a market to recover from a significant systemic event. So if there was some sort of a market shock, the ability for order books to get back to normality and tighten back to similar prices to where they were prior to that event relatively quickly. And so all of those attributes are very important to a healthy liquid market.
How does deeper liquidity impact services like on-demand liquidity or ODL?
That's a great question. So as you think about the value that we're providing sending flow from the US to Mexico, because we're able to use XRP as the bridge currency between the US and Mexico and do basically instantaneous transactions, we are significantly reducing the cost base sending that money cross-border. And the view that we're delivering and focused on enterprises is true, enterprise solutions to help them perform their business more efficiently. But as we do that, we're really giving them the opportunity to pass on the fee savings through leveraging our technology and infrastructure to their everyday consumers. So, somebody living in America who is working and sending money back to their family in Mexico, we're really thrilled that the work that we're doing is really driving value to the bottom line and to everyday consumers.
Additional payment methods that we see in, say, Europe or America. How does this interact with Asimo going forward?
That's a great question. So what we've seen actually in the last year or so is a lot of VC money and private equity money going into some of the emerging market payments infrastructure. So increasingly I can get money into somewhere like the Philippines or Nigeria or Mexico or Latin America instantly, whereas it can take me 1 or 2 days to get into America. So actually the technology that's been built in those countries is far superior to anything we've got here in either Europe or North America, where we're arguing about the standards. So it's been great for me. And so if I can get money from Europe to, say, somewhere like Nigeria instantly, well, 7 seconds. And so once you offer that to customers, they love it. They keep coming back. They send more and more money, and they send more money to more and more people. So, it's been great. That it's exactly right. That leapfrogging of technology that's happening in emerging markets has been really great for our business.
My name is Camille Zhang. I'm a business development major at Coin on Transfer. Our company, Coin on Transfer, is located in Seoul, South Korea. As a retail remittance service, we launched Cross, the first blockchain-based remittance service in South Korea. We launched Cross in October last year, and then we adopted RippleNet December of the same year. Once we start using Ripple solution, there's a lot of good partners in RippleNet. They have also good understanding and also passionate about the blockchain solutions. When we work with our partners in RippleNet, we can easily integrate with the solution, and also the operational cost it's getting lower because we have the same level of understanding. We can use the unified format of the requesting the remittance, so we can easily connect with our other partners. And then our first corridor was Philippines and Thailand, and right now we are having over 12 corridors at this moment. We are having a big growth at this moment, and for a year from the launch, we are having average monthly growth rate over 50%. And the interesting thing is our customer retention rate is constantly over 80%. On RippleNet, at this moment, we are connecting 4 partners for a year, and then we are contacting over 10 partners at this moment. Right now, our main customer segment is foreign workers, but we want to have a new customer segment, which is the Korean. The purpose of remittance would be the sending living expenses or tuition fee. So in that case, we are looking into the developed country, including America, UK, Hong Kong, and Singapore. So hopefully we can connect with the remittance company who are providing those corridors through RippleNet.
My name is Shai Trif, and I'm the CEO and co-founder of MoneyNet. We're a payment processor. We're just payment processing for clients. We are trying to make life easier for companies who works worldwide, who works in the digital world. We're giving the client the feeling that he can act worldwide, but with a domestic environment that will help him to build his business much better than he can without our solution. Once we connected to the RippleNet, our options and variety of solutions that we were able to give our clients are much more enhanced and much more developed. It's very simple. Once we are connected to the Ripple, in one shot, in one API, we can find local solutions worldwide without the efforts and the needs to actually travel worldwide and find local processor or to put the efforts, because as everyone knows, time is money. Connecting to the Ripple and get one API, one integration to the whole world allow us to recruit and get more clients to our network, hence to increase our revenue. We can see the flow of clients who are coming. We can see the increase of new potential clients that are coming. We can see the increase in revenue. We see a growth scale that for sure comes from The fact that we actually are able to invest less time in getting more solutions of the clients because we are connected to the Ripple. Hence, we can invest more time in getting more clients. The level of support that we are getting from the Ripple team, it's something that is absolutely amazing. The connection with Ripple, using the RippleNet, help us to get an access to markets that we definitely were not there before. We didn't even thought how to start approaching those markets. It looks to us like, come on, we are based in London. How can I offer my services to clients in South America? But they actually made it easy.
I come from the Fed, from the payments group. Bitcoin has been a little bit troubled in terms of serving as a high volume payment protocol. And so part of my association now with Ripple, which works with Bitcoin, is to try to find a version of a virtual currency that can do clearing and settlement in real time, whereas the Bitcoin blockchain takes quite a bit of time to clear. So one of the things I'm searching for in terms of investments and involvement is virtual currencies that serve not just as a great store of value and something that solves the double spend problem, which Bitcoin has obviously done and knocked it out of the park on, but I'm beginning to look at what might actually be a solution that actually works as a backbone for a global payment system as well as just being a store of value. Chinese volume, that's really, even on the Ripple network, the Chinese volume is first in terms of the Chinese currency at 75 basis points. And that's sort of the starting range of getting in. And so merchants are looking at that to something higher, and that's just right off the top. And so the digital currencies have the potential to be basically interchange free. And so it's a huge economic advantage, and they also have the potential to settle immediately or almost immediately. Speculators are having a field day with the currency. It is digital gold, but if that's a great opportunity, a 10x opportunity from where we sit, is to move into the payment space. Because like right now, nobody can whip out a debit card and go and buy a loaf of bread with your Bitcoin or XRP. But I believe within the next 6 months, that's going to be possible. And so when digital currency enters the mainstream, as opposed to being sort of an esoteric trading opportunity, then we really are in a situation where legacy financial payment rails haven't had a real competitor in 40 years. The concept that basic functions of buying and selling goods, not just on the internet, but at the corner shop, could be done in digital currencies instantly at a lower cost and simpler is a real race. It's the first real race we've had in financial services in my life.
Ripple is really meant for transactions, not store of value, but transactions. It has a higher throughput than Ether and Bitcoin. It's not as high as, say, Visa, but it's in between. And so it's meant for transactions. Ripple valuation is done on top of what is considered the XRP in circulation as opposed to the XRP in the vault. At the end of the day, sometimes the total float of Ripple is worth more than Ether. It's happened for 2 periods of time in the last 2 years. And sometimes Ether's more than Ripple. So all I know is that if I have quite a bit of either one of those three, I'm kind of in the money. That crypto made it out of the crib in the US. Not all crypto, but a company like Coinbase or Ripple, the first is which I invested, the second where I was the chief risk officer, showed that they could be compliant enough to not get shut down right out of the box. And so it's finding that balance between being disruptive, but not too disruptive. So Ripple was progress from Bitcoin, which was a ledger that was all in Bitcoin and couldn't handle any other form of value or any other issuer. Right. So Ripple took a big stride forward on distributed ledgers by adding 2 columns to the spreadsheet. The concept of other currencies, including fiat currencies, in addition to its own, plus different issuers. Now, it didn't try to tackle the identity problem, and that's part of the reason I personally think that it's having some problem with traction. It hopes that banks will solve the identity problem. They'll just provide the ledger technology. But banks haven't had, like if I have a checklist of major innovations or progress that banks have made in the last decade,
it's a pretty empty list. So if you're going to wait for the banks to figure out how to make distributed ledger technology work in a compliant way, you could be waiting for a while. Ripple, they actually had a concept of identity which is not about who you are, but what you have. And in this case, identity, it was enough that you had the private key to unlock a public address. That's kind of a Mad Max kind of identity.
You kind of take that for granted. That's the way Airbnb got started and Uber. They weren't in, at that time, regulated industries. But generally, things in financial services, you got to be regulated. So when I came to Ripple, that was a new blockchain. That was the second thing after Bitcoin. The first month, we went to Treasury to explain what we were doing. So we didn't operate under the illusion that we would never be regulated and we would never have to ask permission. So it's finding that balance between doing something that's really innovative, but if you want to go mainstream and you're successful, you're going to run up against rules and regulations, guys with guns and badges.
Yeah.
So I walk that
Equally
line.
as powerful, actually.
So I'd like to see these new innovations make it into the mainstream. I'd like everyone in the world to be able to participate in this. So that doesn't mean that you can do it in a Mad Max way. But I hope you don't have to do it in a George Orwell way either. And now I'm more aware of maybe not in a Facebook way. So that's been the big passion, is finding a way that we can take these new innovations and make them for the people. And it's not because I'm like a hippie. You can probably tell I'm not a hippie.
No, doesn't strike me. Ripple, the Fed, historian, not a hippie.
But like my aspiration is like the way the world worked in like Star Trek. Like that's in the future.
Okay.
And like people, they know when the door's open. So there must be some way that like it knows the door's supposed to open for you.
Not
but
for
maybe
me.
Not for me, right?
Mm-hmm.
And so they left out that episode of how to do that. So I believe the responsibility is to figure out how to get the identity solution figured out so you can do all these things without huge amounts of fraud or fake news or all the other downsides of having a system that's bottom up that might be an attack vector for bad guys.
We actually had one of our early investors, Ripple, ask us, hey, we have all these like MSBs, and they're sending money across with XRP using our platform called XRapid, but they don't want to have the currency risk of XRP. Could you guys actually build us a stable coin?
Stablecoin proposal. So I thought it might be helpful for me to walk through what I have in the design to give people a better idea of how I intended the system to work. So first of all, it's a collateralized stablecoin. That means tokenized assets whose value are expected to remain constant in some unit. So if it's a dollar stablecoin and you have 10 of it, you're expecting its value to remain stable at $10. These assets have a backing asset, in this case XRP. That means that there is something that is supposed to guarantee its value. Now in some of those systems you can actually redeem the stablecoin for the backing asset, in some you can't. What's interesting about this proposal is that the stablecoins are perfectly liquid to XRP at face value on the ledger. So in other words, if you have $1 in a dollar stablecoin designed on the system, what you have is a $1 claim on XRP enforceable by the ledger's payment mechanics. And the reason that that's important is with some other stablecoin designs, if the stablecoin isn't popular, it won't necessarily be liquid. If it's not listed on an exchange, if it can't easily be deposited and withdrawn, it won't be that useful. By the design of this system, the stablecoins can be offered through the on-ledger decentralized exchange, and they spend like XRP. So you don't need to find some way to make them liquid. You can just spend them right on the ledger. And of course, they can be pegged to anything that someone can provide a price feed on.
Also, changes that are in the form of new features. One of the features that I think is very exciting is a feature that would allow people to launch, well, stablecoins are the obvious use case, but it's not just stablecoins. It's essentially assets pegged to some external value. Features similar to that exist on other systems, but the interesting thing about this is that the liquidity is guaranteed by the ledger mechanic.
On-demand liquidity, as we like to see it, is a way of bringing cross-border payments or remittances using the digital asset technology, in this case XRP, without having to go through a financial system. So a clear example is, I'm the head of finance. I usually have to bring money from the US into Mexico from my bank account. And instead of going through a wire transfer and going to the bank and calling someone to help me fix all the different details and waiting for 5 days, I can use ODL, where the dollars turn into XRPs. XRPs are sent into Bitso, and they're immediately exchanged for Mexican pesos. So in the span of less than a minute, I have my money in the treasury, and at a rate that was more beneficial for me and a cost-effective transaction. So it's actually a solution that, for me as a consumer, has been amazing, but has also is this solution that we're offering to all of our customers, partnering with Ripple and trying to take over the remittance corridor from the US and Mexico. I think partners that are using ODL, especially in our corridor, are partners that might as well be using that corridor already, but the settlement process is much more immediate, and the cost effectiveness of that. We usually tend to see that a transaction, as we're seeing through ODL, used to cost more than 5 times what it's actually costing them right now. So I think that is one amazing advantage of the product. But another one is the settlement, which is almost immediate, which you don't see by no means in the traditional financial system and how it has operated for many, many years. Ripple plays an enormous part on that customer front with the partners that are actually sending the cross-border payments and remittances. But we have seen adoption, and we have seen adoption not only from players that are already in the space and that we're very easily to onboard, but we're also seeing adoption from players like MoneyGram, who were very traditional players who were doing things a very different way, and that are now one of the most important partners for us.
Is 10 years out on the financial crisis, we still don't have the infrastructure perhaps to prevent the next one. And I think this is where digital assets can really help, because an efficient digital asset can really solve some of the key problems in global liquidity. You know, the world's got trillions and trillions of dollars tied up in liquidity just to get around how clunky the movement of value is around the world. With a really efficient digital asset, something like XRP, again, that's what we believe will be the most efficient, you can now reduce trillions and trillions of capital from being tied up. So you can make those transfers instantly as a bank or as a payment provider or as an enterprise without having to have money pre-positioned all over the world. So that
we do want to isolate the banks from some of the underlying complexities that you saw on the earlier slides. That distributed ledger is very complicated. Again, when Google first came out, people wanted to know, how did Google find those pages? How did I do a search?
Yeah.
And now everybody just uses Google, right? They don't care how Google works. Well, that's the same sort of thing with this distributed ledger. If we can get to the point where you don't really have to know all exactly how it works, but just that it does work, and then you start thinking about all the applications and taking this out to your customers. So as an example, what we're doing is we go out to our banks, they implement Ripple. The first pilot may be just very simple. It may be sending $100 from one location to another, maybe even within the bank. Second step is they start sending it cross-border to another bank. And then they protect themselves, so they create a wallet that only has $100 in it. So the most, if anything goes wrong, the most that they could lose is $100. So it's very safe. Then if you look at Santander's announcement, what they've done is connected Ripple to Apple Pay, and then allow employees to send money. So they don't have to worry about the complexities of AML and what happens if a payment doesn't get, but just step by step testing this out. Mm-hmm. Then they'll start taking it to selective customers. So then we're starting to talk about different types of pilots. It's not a Ripple pilot, but it's a customer pilot using our technology. And that's really, again, how some of our bank customers are practically innovating. At the same time, we continue to change our model. So we are building faster, better distributed ledger technologies, distributed financial technologies. We are going to continue to upgrade Ripple Connect. So our customers, if they use our technology through CGI or other applications, that underlying complexity and the change, they're isolating their core banking applications from that. CGI is one of our most important partners, and the reason we do partner with them is they bring a whole set of technologies that we want to integrate with. Bringing it out to market, and we brought that out last October at Sibos. And 6 months later, we've got quite a bit of interest from banks all over the world, and more than we can handle, so we need partners like CGI to help us bring that to the market. Ripple does, by changing the settlement infrastructure, we then need to work on all those other parts of the stack, as Charlie said. This is our journey. So we started off innovating. We started off as Ripple Labs, and we met with all the innovation teams at all the banks. And we were so excited because we were getting calls from every single innovation lab, and we were doing 3 months proof of concepts about how do we bring this out to market. Well, or how do we make sure we're doing this in the right way. One is to get all the right people in the room from the bank, so the payments team, the risk team, the compliance team, the capital markets team, operations team. When we get all those people together to talk about Ripple, we can come to the right solution. The other thing that we're doing is we're working with the W3C, the Fed, industry associations, and regulators. When CGI came into our office and said we want to integrate our solution with Ripple, it was a 3-month project. It wasn't a 3-year effort to completely change everything. It was a 3-month integration project. Now we're doing another 3-month to add some additional features, but we're talking 3 months at a time. Innovation within banking. So step 1 is just to change the rail. As you go further up the stack, the level of innovation gets bigger and bigger. The kinds of applications that you can build on top of this are going to really transform banking. We started bringing in partners, and they helped us. We had some of CGI's best experts in our offices. And again, as we said, just started to work with these banks. And one thing we quickly learned about Ripple, you can't sell it to one bank at a time. It requires a friend. And not only that, those 2 banks should have an existing relationship. So we've learned again from that, hey, we should be selling to banks that already have correspondent relationships or have business relationships so that they trust each other. The blockchain can allow any 2 banks anywhere in the world to connect, but if they don't trust each other, they're not going to. And so that's where we started to shape that. Then we found out that if we integrate with one solution and another solution, there's no messaging standard. So we've come up with messaging standards. So we learned very quickly 2 banks can't just connect to each other. They have to have an agreed messaging standard. We started that with a group of 5 very large banks who are helping us shape those messaging standards. The next step is, okay, well, now we have those banks able to send things to each other. We set the operating rules, so we work with NACHA, we work with the Canadian Payments Association, we work in the UK with the regulators and with the payments groups to define the rules. And then, again, we started to create a consortium of banks. And the consortium of banks are going to shape multilateral agreements. So as we move up the stack, we start coming up with different problems we need to solve, but the way we solve those problems is we go out to the market as quickly as possible, and then we take feedback from the incumbent players.
Hey, I got a call from the CEO. I probably shouldn't say this. I got a call from the CEO of MoneyGram 2 weeks ago, and he's upset with us because we're not moving fast enough. That was an unbelievable, you don't often have that happen. And he wants us to launch on-demand liquidity, formerly known as XRapid, in more markets more quickly because they're having such a good experience with Mexico that they're like, look, we want to be able to spread this more quickly, more aggressively. So that's great, but we're not going to launch new markets until we've engaged regulators in those markets. We know that the exchanges on the other end are robust and compliant and all the things that go with that.
Today we have proofs of concepts all over the world with some of the largest banks and payment networks. And we've really, I think, proven that the technology does work. We've known it for ourselves for several years now. The technology's been under development for about 3 years, and now we are working with large scheme providers to test the technology at tremendous scale, national types of volumes. So we're very confident that the system works. The results are already coming back positive. And we intend to build a technology and service a technology that can provide payments for not just the world we live in today, where you have banks communicating with banks and sending payments between each other, retail users sending payments and transactions between each other and merchants, but we're thinking about the future where applications are sending payments and paying other applications, where you have programmatic payments. orders of magnitude away from larger than the existing infrastructure we have in place today.
So there's quite an enthusiasm at the adoption level from the big institutions.
That's absolutely correct. I mean, the big institutions use the technology and I think are attracted to the technology for a number of different reasons. It really depends on the type of financial institution. Large financial institutions, I think, are attracted to this idea of being able to send a payment without having to post collateral or reserves to your beneficiary bank. Routing a payment dynamically through an open competitive marketplace of currency traders and FX providers to fund your transactions is a new concept that a lot of large institutions are very attracted to and very excited by.
So the difference between retail and financials, obviously started in the retail space. You're different, far away.
Okay, great. So right, the technology here is different in that our focus is on wholesale banking, interbank payments. The technology we've developed is designed to accommodate liabilities rather than a new asset class, digital asset class. So as a consequence, your counterparties really matter, and the best counterparties are financial institutions. So the technology here is really best suited for wholesale interbank transactions.
What we've seen is that banks have traditionally supported our technologies, but the reality is that there are faster moving players like non-bank financial institutions that support and adopt our technologies quicker. V1 is to use, fiat currencies to send international transactions. V2 is perhaps to use cryptocurrencies in flows. We're in a kind of a fortunate position to be able to provide real use cases and real results that make it almost impossible for banks longer term to say we can't use digital assets in our flows. We may need to support this at some point. I think that solving for global transactions is a real and is still a real pain point. And I think that in 10 years from now, if Ripple is to be as successful as we'd love it to be, then international payment should happen in 3 to 5 seconds anywhere around the globe. We have use cases that support that. So a guy who wants to send his child money from Asia to the UK because he needs some rent for students. That is a real life use case that we do today, and we can offer real-time settlement and transaction within 3 to 5 seconds, which I think, if we can do that on a global scale, which is Ripple's vision, I think that, the banking sector and financial services as a whole, they're onto a real winner there.
All right, I had an alert for a while on Ripple, oddly, on LinkedIn. And finally, the day came where a job role lined up exactly with my expertise. So knocked on their door, and within 2 weeks was working at Ripple. So that was the first full 2 feet dive into crypto that I took with my career.
And there you were head of XRP Institutional Liquidity?
That's correct. Yeah.
And so what did that role entail?
That role was, every aspect you can think about an asset in this market, I was involved in. So whether it was understanding XRP trading on exchanges, the global exchanges, getting the listings there, understanding who was trading this, whether it was your market makers, whether it was your retail and institutions, understanding how liquidity can grow, what type of financial products we actually needed to provide to users to make sense of this. So OTC markets were picking up people wanting like large block or tranche trades in an XRP, and then understanding just our impact on the larger crypto environment with introducing XRP and what other aspects could be built upon it. So if you think about every component that I worked on, that's really what helped me take on this next role, because anything from custody to market makers to trading liquidity to apps to OTC, I was involved in understanding who were the key players at that time.
And then, so why don't you tell us the story of how you became CEO of Binance US?
Yeah, so it wasn't a short story, but I was over in Singapore with Cumberland, which was one of the OTC desks that we worked with on the XRP side, and they're hosting one of their first big summits where they brought in the likes of Jihan, CZ, the Winklevi, Joe Lubin, all these greats of crypto that were seemingly on opposite sides of every table. They finally brought them into one room. And it was, what a spectacular opportunity to be in that room and really understand how we were going to move forward as an industry.
These institutions are banding together to form something called RippleNet. And that is, really those financial institutions kind of are in the driver's seat and really have the keys to operating that network. We're rewiring the infrastructure, but we're not a network operator. So it's still up to the financial institutions who are using the technology solutions we're providing to, for example, onboard the customers who are sending money, manage the flows and all the relationships, using XRP as part of their liquidity solution. Those financial institutions don't actually have to hold XRP. It's the hedge funds and other types of market makers who are providing that XRP liquidity through crypto exchanges. Keep getting more financial institutions in more countries and locations set up on RippleNet. We also think about accelerating volume on the network. So, amongst our customers, we don't want them to just be using RippleNet for one key corridor, payment corridor. We want them to be thinking about how RippleNet can improve the services that they're offering in lots of different corridors. About 100 new customers to production contracts, meaning, they're using this commercially. It's not about pilots or POCs. And even, in their consideration set of using XRapid, using XRP in their payment flows, again, because they're not really, the design of the product doesn't require them to hold XRP, the volatility is not really part of the conversation. One of the revolutions with crypto is creating open marketplaces and the ability for kind of greater democratization of trading. So, for example, if you're more independent, like in a hedge fund, you can provide liquidity for payment flows that you wouldn't have been able to before using crypto.
Look, the question being that I have here now, right? I know that effectively XRP is not an investment, right? It's a utility, whatever you want to call it. Now, based on that, help us to understand how somebody who's listening to the show right now, who's thinking, oh, I know it's in the top 10 and I've heard lots about it, but why should people be being involved in XRP? Now, I know that you've got some tricky ways around answering that, I'm sure, as far as what you can and can't say, but what's going to drive XRP to be taken up more and therefore more than likely put more supply pressure to the upside than the downside, shall we say?
We really think about XRP's utility. That's where, with any kind of currency, it all comes down to how useful is it and for what reason. And so, as I was describing, XRP, if you look at it as a settlement asset, it settles very fast. So on average, about 3 to 4 seconds. Very scalable, can do about 1,500 transactions per second. Very low energy consumption and need because the design of it with the consensus algorithm doesn't employ proof of work, so it's not running into the same kind of issues as Bitcoin or Ethereum or other systems like that. So we really think about use case. In the context of RippleNet, we found a killer use case that's been tried, tested, proven with our customers serving liquidity for payments on an on-demand basis. Beyond that, there's an initiative we kicked off last year called Spring, where there's a team here that's also engaging with a much broader crypto developer community that has, they're constantly kind of turning over new use cases for XRP. And again, it kind of goes back to like those attributes I was just talking about as to why they would want to use it.
Okay, well answered.
The cross-border payments experience 5 years from now.
Thanks, Katie. Thanks for the invitation, Ray and FinTech Americas. It's a pleasure to be here this year again. So what we have done and what we see for the future at Ripple is really how to remove the friction on the cross-border payment space, having more efficient process with less costs, improve the speed, and also work with the banks and the payment providers on the business process to make it a seamless process and payments that could happen instant, being local or being cross-border payments. So when we look into the future in 5 years, I think we are not going to be discussing anymore payments that are not instant, right? So we see many countries implementing domestic rails 24/7, and we see a lot of banks and payment providers working, bridging those local domestic clearings, bridging that with the cross-border payments, also 24/7. So I believe in a few years from now, any payment we are going to make, if it's domestic or international, will be 24/7 and can be executed seamlessly as if I was sending an email or if I was sending a file through the internet.
Would you agree, David? Do you think that instant payments in the cross-border realm are...
Yeah, and I think that it's very consistent, our view from MasterCard in terms of what does the global payment world looks like a couple of years from now, right? And typically you go to a store, right? You can buy anything with your card. You know exactly how much you're paying, how much the merchant is receiving. And you also know that you're getting the money now, or whatever it is, after settlement in 2 days. But it's crazy to see how in the cross-border space, and you want to send a wire to like your family member in a different country, you have no idea how much they're going to get. You don't know when they're going to get the money. And to Ricky's point, it's ridiculous. So I strongly believe that as an industry, it's not only where I see it, I think it's a must that we have to get there. So what we are building at Ripple is really the Internet of Value. So how we can move money today the same way we move information, right? It's crazy. We can stream video from the space, and we cannot send money, right, internally. Even if it's my own account in Europe, my own account in US, and the money cannot be transferred immediately. So that friction, I think it's going to go away in the next few years, and we are not going to be discussing this anymore. One use case that we believe is a big issue, is a big pain in the market, which is cross-border payments. We are talking about a multi-trillion-dollar problem that we are resolving, and let's focus on that. So even the banks, they come to us today, say, oh, can you help us with trade finance as well? Can you help us with securities? Can you help us with many issues we have today that we could resolve with blockchain? And we have decided back then that we will nail cross-border payments first. We will take the example of Amazon, right? So Amazon, when they started, it was Amazon Books, right? They were selling books. So if they were not successful selling books, they could not go on and implement other use cases and become the giant they are today. So if we go back and we think, what are we focusing now? It's really cross-border payments as the first use case for blockchain. And then once we succeed and the banks implement and they are comfortable with that, of course, we are going to explore other use cases and expand the technology to address those pain points.
Where are then the power centers? Where does bank like Amazon? I always think they should be doing this. This is kind of something.
Well, I think it's an interesting question, and you are seeing.
It's the one company I think, not Facebook. Everyone's always Facebook. I'm like, not Facebook. It's Amazon.
Well, I mean, obviously Apple has announced some things recently with Apple Pay.
Yeah.
Amazon has made some noises and partnered with Chase and some things. I think you're going to continue to see digital-first companies lean into this space, and to the extent it can be done better, then I think you're going to see companies like Amazon say, I have a ton of respect for Amazon, and I think if Amazon were to offer solutions around payments, do you think it would take 4 days to send a payment to London?
No.
And cost, actually, a gentleman who used to work at Ripple sent me an email this week. He had invested in a company in Europe, and he had a 4% fee on it was an investment, so it wasn't a small check, a 4% fee by the time that is all settled.
Right. To get the money there.
Yeah, that is crazy. And I just think that if Amazon were to aggressively enter this market, and you asked the question earlier, what is the incentive for the biggest of the big, the cities, to lean in? Well, if they don't, and Amazon launches
or Apple
or fill in blank,
right?
Where does that leave them?
Right.
If you want to do e-commerce payments globally, these companies are left with no choice but to build their own payments infrastructure. But we think that there's a better way. We think that you can deliver a standard for these companies. We think that you can, take this experience and bundle it up for these customers. We want Airbnb focused on delivering, a great stays around the world. Uber getting, people where they need to be, and Amazon delivering 5 packages a day to my house. And we want to be focused on helping these companies move money globally, and that's really our mission. So, one API, instant payments, and we want to make that more efficient than it is today.
We talked to a lot of our customers around the world, and I was surprised that even large customers, it takes them 3 to 5 days to get the payment where it needs to be. And this was the case of Amazon paying merchants cross-border and taking weeks for that payment to arrive.
Amazon has to figure out how to disperse funds to vendors in 185 countries. Amazon only does disbursements in 19 currencies, which in and of itself is a huge effort for them. That means tons of integrations into different banks. That means employing literally hundreds of people within Amazon to work on payments. That's true. We've talked to people in Uber. We've talked to people in Airbnb. These are not payments companies.
New companies like Amazon and Uber need a seamless global experience. They don't want to integrate with a new API or 3 different mobile payment companies in every country that they want to communicate with. They need fast payments.
Is that we did a lot of research in terms of what was broken with the financial system and the payment system, and we went out and visited with Uber and Airbnb and Google and the others. And what I realized is that these firms, we think of them as tech firms, but a large part of what they do and the value they provide are payment. Amazon, for example, has 206 different payment connections to facilitate merchant payouts for their platform. And so, they're pushing innovation. And I don't think that they should be in the payment business. I think that they should use, other technologies instead of, and focusing on what they're really good at. And so, their role right now has been to push innovation, and I think that's a good thing. But in the future, we're hoping that there's other solutions like the ones Ripple provides so that they don't have to get in that business. The way that these companies move money today is essentially they become their own payment company. And they're out there integrating, as depicted on this picture, hundreds of systems around the world. Amazon, 200 people in Seattle just working on payments. Uber, again, hundreds of people working on payments. And, our vision is, well, why don't you focus on transportation or connecting hosts and guests, and integrate, a standard API that allow you to access the world in terms of cross-border payments. And this is a vision that we've been working on for the last 5 years. We want to bring this together in the next year to enable corporates to move money across our ecosystem.
Before Spring, I actually also created the XRapid product.
スプリングの前にもですね、私はラピッドというプログラムを作りました。
We're very proud, that that product has grown to over 100 people that are supporting it within Ripple.
で、リップル内にですね、100人以上の人がこれをサポートしてくれていることに大変感激しております。
And we've seen MoneyGram, which is a global company, use it to expand their business.
世界的な企業であるマネーグラムもですね、自身のビジネスを発展させるためにこれを活用してくれていることに私たちもすごく嬉しく思っております。
But as David Schwartz said, we believe that the world is bigger than just one company or one technology.
ですが、先ほどシュウォーツが言った通りですね、一つの技術だけで世界が、解決するとは全く思いません。一つの会社だけでもそれは無理です。
And that's why we built Spring, the open platform for money.
なので私たちはスプリングを作りました。お金のオープンプラットフォームです。
Spring is not just for blockchain developers, it's for all developers across all different currencies.
で、ここに書いてある通り、もちろんスプリングはエンジニア専用ではなく、あらゆるエンジニア、あらゆる世界の人に向けて作っておるんです。
Spring is focused on the $5 trillion a day FX market.
で、スプリングは5兆ドル、1日5兆ドルもの規模の FX マーケットに着目しております。
Compared to the $2 billion a day crypto market.
まだ暗号資産は1日20億ドルぐらいしかいません。
So the words we settled on are to enable payments everywhere, every way, for everyone. And we thought about every single one of those words and they mean something. And I think the most important one is enable. We're not going to do everything ourselves. We're part of a community and we're part of an ecosystem. So what we need to do is build the technology that will enable those payments for everyone. And by payments, we mean any transfer of value. That could be fiat currencies, that could be dollars and yen, it could be cryptocurrencies. We mean everything for everyone.
Our purpose was to make XRP as liquid as possible. One of the things in order for it to work through the system was that it would be the conduit between transactions around the world. And if you looked at FX being that conduit around the world, that average volume a day was like 5 to 6 trillion. Mm-hmm. So if we were going to be able to make transactions of that quality go through, you would need to have a much more liquid mechanism. So that's where you can either see the price rising to accommodate for the volume necessary, or you can see the liquidity increasing for volume necessary to handle. We break it down to kind of, if similar to that, if you've got one structure being infrastructure, so that's like your exchanges, your OTC desks, kind of that core venue that you're going to be trading on. Then you've got the speculators, which can be anything from, a retail day trader all the way through to, significant endowment or a fund. And then you've kind of got the third leg that doesn't really exist yet, and that's corporate flow, which is a significant reason why the FX markets move. What is that? You've got that consistent need for a company in one area to make a transaction repeatedly based on their needs from a corporate perspective. So you think about Toyota and their dollar yen, they have to repatriate all of their revenues from overseas every quarter or every year in order to clean up their balance sheet and prepare for a fiscal year ahead. So those flows don't exist yet in the crypto markets, but we're working on it. So that's one of the things where if you have that consistent flow, then the speculators will be able to take advantage of those different seasonalities of corporate flows, but you'll also just always have momentum in the market taking place. So I think that's one of the factors that Ripple was really working on, was being able to provide a mechanism to which corporate flows would be consistent. So you'd have people using the mechanism of XRP in order to send flows from one country to another at a consistent pace, or at least a repeatable one. And then the speculation, or that arm, would be able to go as they please. But that way you'd always have kind of two-sided markets naturally.
Is that we did a lot of research in terms of what was broken with the financial system and the payment system. And we went out and visited with Uber and Airbnb and Google and the others. And what I realized is that these firms, we think of them as tech firms, but a large part of what they do and the value they provide are payments. And I went to Uber and they have 200 people working specifically on payments, and that's because the current system doesn't work for them. So they rebuilt a payment system using 200 people all around the world. Amazon, for example, has 206 different payment connections to facilitate merchant payouts for their platform. And so, they're pushing innovation. And I don't think that they should be in the payment business. I think that they should use, other technologies instead of, and focusing on what they're really good at. And so, their role right now has been to push innovation. And I think that's a good thing. But in the future, we're hoping that there's other solutions like the ones Ripple provides, so that they don't have to get in that business themselves. What we're seeing is this trend, especially in Asia and Latin America, of folks moving from cash to digital. And those are really hot markets for Ripple. We're signing up tons of customers there. But I think we're doing it in conjunction with the most innovative banks. And so I think that in Silicon Valley, there's this thing that banks are going to be dead. We disagree. We think that especially in emerging markets, some of the banks out there are moving faster than a lot of fintechs. And so we're building a new payment network built on blockchain, but we're bringing together the most innovative financial institutions around the world to make that happen. To that, as it relates to blockchain, Southeast Asia has taken a leadership position from a regulatory perspective in regulating blockchain. And the PayPal of Thailand, for example, offers cryptocurrencies in its wallet. So you can use cryptocurrencies for remittances in those countries, and it's dropped the cost of remittances. And so you're seeing them use regulation as a platform for innovation. And I think that the U.S. has got to catch up here. I think that we took a leadership position in regulating the internet. And we benefited greatly from that, but that's not the same position we're taking right now with blockchain. And so I think that's been taken a little bit with Asia right now, and especially Japan, Singapore, and Thailand leading the way. We have seen big mega banks adopt blockchain. Santander is one of our largest customers. They have created a very innovative remittance app all on top of blockchain, and that's brought a lot of new customers back to the bank that they were otherwise losing to fintechs. And so you are going to see some banks take off. I think two things have to happen. One, they have to identify the right kind of use case that blockchain is going to be transformative for them for. Those tend to be low-value remittances or e-commerce payments. The bank has to be really interested in going after those kinds of payments. And the second thing, in terms of the United States, I think the regulation has to be clear as well. And so far, it hasn't been very clear, and I don't think any large mega bank in the United States is going to jump 2 feet in until that becomes clear, and we're hoping that'll work itself out over the next year or so. The other great use case for blockchain is we have a company that is sending e-commerce payments internationally. They are now able to send their freelancer payments multiple times per week, $10 a payment. There is no other technology, in my opinion, that can do that in the speed that we need and the cost that we need, other than using this technology. I think Asia again has a really good model of drafting sample regulation, getting the partners, fintechs and banks to come together and participate, and then putting out a more favorable regulation that works for a lot of players, both incumbents and new guys as well. Do you agree that it's going to take a lot longer than we anticipate? I think the markets did get ahead of themselves there. But I think if regulation becomes clear, you will see rapid adoption of blockchain, but it might just be further out than we originally thought.
Actually work very closely with about 40, 50 central banks across the globe, including Bank of Thailand.
Actively engage in with 50 governments around the world.
The Bank of England is a paid customer of Ripple. I called the CEO of MoneyGram 2 weeks ago. It's us to launch on-demand liquidity, formerly known as XRapid, in more markets more quickly, because they're having such a good experience. Incredibly pleased by the engagement we've had, ranging from the IMF to central banks.
10 years out on the financial crisis, we still don't have the infrastructure perhaps to prevent the next one. And I think this is where digital assets can really help. With a really efficient digital asset, something like XRP, again, that's what we believe will be the most efficient.
What is Interledger's total addressable market size? It's all the money.
What do you think is the biggest challenge for banks to adopt XRP? We don't see a major challenge in adoption, to be honest. In terms of adoption, it's really about using the banks which were shown in the earlier slide to create the initial network. Once we scale, and the banks we're working with together would allow around a 90% coverage of the world's global networks. So we're having some great dialogue with banks around the world about using XRP.
See IMF holding crypto assets in the future. I did not put that up there.
Remember, I'm from the legal department. I'm supposed to be very conservative about these things. Current legal framework, some country would have to use a crypto asset as its currency.
The Codius platform would allow creating financial derivative products.
The largest global money center banks on the planet, and I was talking to them about our primary product, fiat to fiat, called X-Current. And this guy kind of interrupts me. He's like, yeah, that's nice, but I have a problem settling into Peru. Can I use XRP to help me settle into Peru?
Merge R3 and Ripple. Make sure that XRP is
practically used?
Middle East to South Asia corridor, we are already mainstream, right? So if you look at the top 4 banks in Saudi, they are our customers. You look at top 4 banks in Kuwait, they are our customers. Number of institutions like UAE, Extract Bank in the UAE are our customers, right? They're only all mainstream. We believe that we are at that tipping point, right?
Critically, from a financial services perspective, it is maybe better to think about it as open architecture. And what that means, and the distinction is that we expect financial institutions and payment networks, governments and regulators to design closed systems on top of the open protocol. So that's the distinction between a payment system and a protocol, is that this is not designed to be an end-to-end catch-all payment system with rule sets and payment standards and messaging. It's very, very simply a basic layer of a payment system, just the ledger and the settlement component. So on top of that, we can construct all sorts of different closed systems and construct payment systems on top of the protocol.
And you're expecting people to do that? Who are you expecting to do that?
We expect financial institutions to do that, particularly on the wholesale side. We look at this technology as having its most profound applications for interbank settlement, clearinghouse settlement, using the technology to facilitate transfer of assets between, frankly, just different asset custodians. And so we really expect this to be something where legacy systems, legacy networks can migrate their existing infrastructure and capabilities right on top of the protocol. Ripple is a general purpose database. It's just simply a spreadsheet. Anything can go in it, and we can denominate it in just about anything. So airline miles, loyalty points, G10 currencies, gold, stock certificates, options, derivatives, anything of value can go inside of the Ripple ledger, which is very different than the way the blockchain technologies are designed and what they really, frankly, can enable.
Innovations and changes, they stimulate other innovations, and seems to me, had Ripple been not doing what it has been doing, we wouldn't have CGPI. I'm deeply convinced that financial organizations, I don't know, banks and everyone who is on this market, mature players, they don't want to change because all is well, they're satisfied, they're stable in Russia and all over the world. An external factor can change things, and this external factor may be a disruptor or a client. Ripple, for example, or CGPI. Banks are behind Ripple and SWIFT, so it's community and another community. So the product is changing and somebody is pushing this change. When a company understands that there's a disruptor somewhere, they start changing. But the approaches are slightly different. Ripple is more about conversion and other things. And this is already a product. SWIFT is like rail track. As for payments and expectations of our clients, I think it's a philosophical question whether innovations would suffice, would there be any changes or not. Clients need to understand status. They make a payment, they want to know whether it has been received or not. Looking at the current state of play, currency control and monitoring, and other things. Let's say nothing changes, legislation is not changing. The main problem would be the transaction. SWIFT is not a payment system. As I said, it's rail tracks.
The idea of moving large blocks of liquidity through these liquidity pools, which are disparate and kind of broken up, and is an interesting one, especially when you compare it to traditional markets. One of the things that I'm fascinated by is really the lack of leverage in the system, and I think it's one of the things that really constricts the amount of liquidity that's flowing through the exchanges and the OTC houses. And we'll probably touch on some of this later, but the fact that everything is basically pre-funded and one-to-one limits the amount of liquidity that goes through, especially the larger cryptocurrencies. So I think things are getting better, certainly, and folks like Circle and a few others in the OTC space really are kind of the trailblazers in that space and allowing to take that risk. But once we get folks to be able to go long and short in any considerable size and leverage those balance sheets, I think you'll see that get better.
That feeds well into the next question of when can we expect those facilities? What does the timeline look like for leverage in the system?
Yeah, that's you know, I was in the back of the room listening to the previous panel, and custody came up, and you know, when custody comes up, I immediately think, well, then the next logical step is obviously prime brokerage services and large banks offering you know, a suite of products in crypto at some point that, you know, mimics what they do in FX and equities and commodities. I think until we solve custody, we can't solve that second problem. And I do think once we solve that second problem, then these markets will begin to look like other markets. Until then, really your number one place for liquidity is the exchanges and, you know, the credit risk that you want to take there or the credit risk that they want to take with you. So the first step to custody, because there is no recourse if your assets disappear from your wallets, is insurance, right? If somebody's willing to insure those losses, then that can get larger financial institutions, I think, more comfortable with the idea of custodying the assets. I think also it's interesting, you know, there are folks looking at this, right? I mean, there's, you know, Gemini custodies and ItBit custodies and Kingdom Trust custodies. So it's not like no one is doing it, right? But we've yet to have kind of, you know, Goldman Sachs or Morgan Stanley or State Street, you know, Boney. These guys have not jumped in yet, even though that you hear whispers and rumors that people are looking. But one of my jobs is to, again, create this liquidity pool for XRP and build a big capital market around it, because without liquidity, we can't fund, you know, we can't create the liquidity that you need for funding payments through some of the products that we're building. But even if you had, and I know it's all kind of chicken and egg, but even if you had the prime brokerage model and you wanted to offer leverage to your clients, that means that you now have to go out there and source a bunch of Bitcoin or Ether or XRP, and that's not easy to do, right? I think one of the advantages that we have as a company is the fact that we sit on 60 billion XRP. So the day that Goldman wants to open up their trading desk, they don't have to go find, you know, XRP. They just give me a call, which is nice. You know, I think it's, and you know, interest rates in this market are pretty expensive, so it's a nice recurring revenue stream one day. So I you know, but that is a problem that needs to be solved somehow, right? Because you can't just have one person doing it, because truthfully what happens is that Goldman borrows from Morgan, that borrows from Deutsche, that borrows from Credit Suisse, and it's a little bit of ring around the rosy, and they all end up borrowing from a central bank. We are using it for investments, right? So we are funding other companies with our XRP. You'll hear some stuff about that as well. And then, but really, we don't want to get rid of all of it, because we do feel like being maybe a primary lender in the market will be helpful as we try to build liquidity in the space. So, you know, the idea that we'll be better off with no XRP, I think, is not one that we're going to subscribe to. XRP is going to win the payments case, and we think Bitcoin will be a store of value, much like gold. And I think when you look at gold, and I cut my teeth on gold, I spent 15 years as a gold trader. You know, that space is an interesting one because nobody is naturally short gold. You don't eat it. You're not going to build your house out of it. You don't put it in your car. So in a vacuum, if gold goes up to $10 million an ounce, you don't really care, right? Similar to Bitcoin. But what that means is that you have an imbalance, because there are folks who don't need to hedge one side of risk, and there's only folks who are long it, and they only need to do one thing and sell. So for a long time, that created this dynamic in gold that always was going down. That changed dramatically when the ETF came out, because now all of a sudden said, well, you can democratize the access to it. And people say, well, I am short one thing that gold helps with, and that's risk. Right? Everybody's short risk. So that changed that balance to the point where now gold can start to rally. I look at Bitcoin and I see it somewhat similarly, obviously in different points of its development, given how much older gold is than Bitcoin. But at the end of the day, you need people using the stuff for something, right? The liquidity has to come from users of the technology, of the assets, of the currencies. The reason FX is a $5 trillion a day market is not because there are a bunch of high frequency traders who trade all day. It's because there's a car company in Japan that needs to pay somebody for parts in dollars, and they have yen and they need dollars, and somewhere along the line that swap has to happen. So until we get to the point where I think we start to embed these technologies in real economics, I think you will see a sort of a cap in terms of liquidity and volume. You know, it's easy to be long this market because there's a lot of folks who have made a lot of money in it who are not going to sell. So there's some selling pressure that you don't have to worry about. And then, as I mentioned before, it's really difficult to get short in any institutional size. So there's another selling pressure that you're probably not going to see. So I think you'll see these dips when people get scared, but really the large holders, they're not getting out. These pops in price, which are opportunities. Now, over time, again, you know, the non-structural inefficiencies will be borne out, and you know, as liquidity grows. But at the moment, there's some real opportunities there for not just traders, but even for payment providers.
I think if I'm being 100% frank, I think the challenge for even a second or a third tier bank is where they're going to source the liquidity from, and that's something that I'm trying to solve for, right? I mean, if somebody wants to send a payment from Mexico to India, at the moment, we don't have a Mexican rail for XRP, right? Not even on a digital asset exchange. And you know, maybe banks get to a point where they're comfortable dealing at digital asset exchanges because these, you know, like Bitstamp, for instance, is fully regulated and they have banking relationships, and definitely the worlds are coming together. So I think we'll get to a point where, yeah, banks, no problem, will connect, you know, to Coinbase or Kraken or Bitso or, you know, whoever it is, and source liquidity that way. Or, you know, the other alternative could be that as this space grows and as liquidity for XRP grows and we get closer to that goal of institutional standard, places like a Bloomberg Tradebook or an FX All or a Reuters Direct, they start to list digital assets. Now, these are very traditional capital markets FX liquidity pools. If we get to that point, then it becomes very easy for a bank to run a payment through the ledger, right? But really, it's all liquidity dependent, which is really what you're solving for with respect to the cross-border payment with XRP.
We think of liquidity also in terms of where it is. And because our software solution is really about moving money from one place to the next, and we're trying to solve around this problem that you can send a text message in 3 seconds or an email in 3 seconds, but it takes you 6 days to send $10,000 from here to Mexico City. So we need liquidity of XRP, in the case of Ripple, both in the US and in Mexico. Well, that's not a real problem. South Korea is great. But what's going to happen when we're dealing with Switzerland? Or what's going to happen when we're dealing with, you know, Moscow's pretty good too. But we're really thinking about sort of pairs of currencies, and we need liquidity in all the markets in which we're transacting. So to have global liquidity to go from dollars into whatever coin isn't so important to us as to have liquidity from whatever the fiat currency is in that place to XRP. And we're working to build that both through our sales of XRP and to help develop and help. You know, we really look at the market makers as partners. We really want them to be very active in a lot of places so that all of our banks that are using our software can access liquidity through those different market makers in all those different countries. We have a lot of financial interest coming to this where people want to invest in it. Institutionally, I feel like the institutions are just waiting with their faces in the window trying to get into this thing and waiting for some of these important issues around custody. I think there are important accounting issues as well in terms of banks and the way that they count the assets that they hold in their books. Capital requirements are so important to banks, some more than others. If this doesn't get counted as capital because their accountants because GAAP accounting doesn't yet allow for that, that's also, I think, a hindrance to this industry. But I think that those things do get solved sooner rather than when are there more futures contracts beyond Bitcoin, right? When does it expand to Ether? When does it expand to XRP and Litecoin, you know, those most traded assets? And I think that that's going to start to create lots of potential financial markets that go well beyond being long or being short or being long the future or short the future, you know, puts or calls, whatever you want to think about it. I mean, that's going to enable products such as lending products, right? Banks sell off their risk by being, you know, by essentially being short something or long something over the long term with contracts going out with currencies right now. They can't do that with crypto, but they will be, once they're able to do that with different types of crypto, then there'll be different kinds of lending products out there because they're able to hedge off that risk.
Scooter Braun, a known entrepreneur in the entertainment industry. He's launching some interesting projects using XRP as a base technology. And so our spring initiative is going to help them do that.
Raisin Space mission is really to take the music industry and to help it self-disrupt. and give birth, hopefully, to this next generation of tech companies that the music industry, for the very first time, is really a partner in.
To raise the value of music. That's ultimately what we're here to do, is guide tech founders on how to bring their ultimate visions to life in an industry that traditionally is scary to enter, mainly because a lot of people don't know how to navigate the waters.
So, blockchain and XRP expands from this very, very finite view of an artist-fan relationship to ultimately being able to power this next generation of what fandom and monetizing fandom will be for artists.
If you're screaming about rights management and payment solutions, but the music industry is like, what are you talking about? Things are great right now. We are thriving, we are flying, and we don't need to figure out efficiencies and cost cutting. We're not looking to tighten our belt. Bring us to next Spotify, bring us to next TikTok. As an investor, that's going to have an influence on what you're going to put your time, energy, and resources into, right? So for us, it was really getting a sense of alignment between what we saw was outdated and what the industry saw was outdated, and we came to two massive pain points that we decided to focus on.
We had to say, what does data mean for music, and what are we missing when it comes to the use of data that can help us derive the insight we need to scale an artist. So audience is one of the biggest things that we're doing when we say break. And what does that actually mean? It means taking an audience from 0 to 100 million, 0 to superstar.
So what kind of variables impact a really liquid and robust, healthy market, and what would that look like for digital assets?
Great question. The components that kind of take place in a market include the infrastructure layer, and then as well the speculators, the liquidity providers, and then corporate hedging. That's huge in the FX market, which allows for two-way flow to occur, and that's really kind of the fundamental difference that digital assets currently are missing.
Liquidity is one of the significant hurdles for institutional adoption of crypto assets, broadly speaking. So when you think about very traditional asset managers entering the space, they're all very interested. They're all doing their homework. They're constantly engaging and wanting to find ways to invest. But until they see deep liquid two-way markets and know how they can manage the risk efficiently, they're not going to enter, and certainly not in size. And so the development of derivatives and deeper liquid markets and hedging instruments is a very important strategic step towards institutional adoption.
That can actually help us on all the three elements, that is transmission, settlement, and reconciliation, and that too in an effective manner. We found that Ripple could do that in all the three things. So which is why we've partnered with Ripple to actually explore more and try to see if we can bring blockchain into our mainstream business. So this is how we go about. So the only thing is, we are in the process of going live on the Ripple platform. With us going live, there are two things that we will solve out of the three. We will get our transmission right. We'll get it instantly to all the banks that are on the Ripple network. Number two, we will also get our reconciliation right because the reconciliation of transactions are instant on the Ripple net, unlike what happens in the SWIFT or the other transmission world. The third thing, which is settlement, Ripple has the capability, but unfortunately, because of regulatory restrictions, we are not venturing it into at this point of time. So this is how...
A lot of time it gets misunderstood. So how does XRP gets used, right? Let's assume in UAE, in a regulatory environment, Rahul was allowed to use XRP. Then, like he rightly said, he can solve the third problem as well. Because what Rahul or UEX needs to do, they park a huge amount of pre-funded liquidity in banks around the world, which is essentially trapped. And if you look at the amount, this is in tune of something like $23 trillion that the banks have parked with each other, which is essentially stuck there for these payment systems to move. What we are able to do with XRP is we are able to do this liquidity on demand. So in that case, what will happen is you will give your AED to UAEX. UAEX will look at the total funding position that's required to process hundreds of these transactions, say, for example, from this room. And instead of maintaining a pre-funded balance, it will send XRP to the beneficiary country or beneficiary bank. And XRP gets converted into local currency and the payout essentially happens. And the whole transactions takes few seconds. But the great thing is that Rahul, instead of keeping millions of dollars in the pre-funded accounts. He keeps zero. He funds on demand, and he's able to move money around as and when he would want it. Well, I would say, as our CEO has said many times, we don't care about volatility on a day-to-day basis, right? So, I mean, these markets are in early stages of development. Primarily, they're being driven by retail investors, and now the institutional investors are coming in. Slowly, what we're seeing is happening, and it's not slow, it's actually very fast, that the markets are deepening, the liquidity is deepening, there are a number of instruments that are being put in place, derivatives, future, and as you would see, you would find that the volatility will start to go down. I mean, we are talking about maybe 5-8 years in terms of the whole market getting developed. Capital markets take much, much longer time. And this market, of course, will develop much more quickly, but the liquidity needs to deepen, a lot of instruments need to be traded, and once it is, the volatility will come down automatically, right? And then the questions around stability, the question around being usage around the banks will automatically go away. So think about it, if banks were to come on the platform, automatically the markets need to be deeper, and they would also contribute to that deepening of the market itself. We are a company which already processes billions of dollars in transaction throughput, and it's at scale, it's already working. And a lot of banks, you are adopters of Ripple. Both are traditional solution that works with banks, and of course, our digital asset, which is essentially XRP.
Good evening, everyone. My name is Rahul Pai. I'm the Chief Operating Officer of UAE Exchange. So we are exactly opposite of Ripple. We are a consumer company. So UAE Exchange is part of a larger group or a network of brands, which includes some of the renowned brands like Travelex, Express Money, Remit to India, and off late we've also floated another brand called Ditto, which is a digital bank in France. So we, as a group, we are into 3 major businesses. We're into money transfer, foreign currency exchange, and payment solutions. So there lies the clue of what we are actually doing with Ripple. As a standalone entity, UAE Exchange is present in 27 markets, and we move close to $30 billion of money transfers across the world, which makes us the 2nd largest money transferer in the world.
So look, I think number one, it's great that there's a Bitcoin future. I think that's wonderful for this space. And I think everybody knows that CME is an investor in Ripple. Everybody knows that I'm from CME. So, the relationship is very, very good. They're going to try the first big one first. They have to, right? They would be silly for them to start with anything else because Bitcoin is the most liquid digital asset in the world right now. They're not going to launch all of them until they see if Bitcoin is successful. If Bitcoin is not successful, and there is no guarantee that the Bitcoin future will be successful. If it's not, then they're not going to keep launching these, right? TBD, I think patience is good. We still have a little bit of work to do on listings for XRP in the States. If you look at the CME future, it's got 4 prices, 4 good prices, 4 exchanges. We don't have 4 US dollar listings in the States right now. So I think it would be challenging for them to create the index for the future today. So let's just see how things go. But if Bitcoin is successful and we do our job, that's certainly a possibility down the road.
Within a lot of these big institutions that on the one hand, yes, they're conservative and they're slow. On the other hand, there's actually a lot of pressure, often from very high levels, boards, CEOs, and so on to say, well, we need to know this space. We need to be doing something. So actually, you can get, in some sense, acceleration of certain projects because people feel that they want to do something. Now, doing something could be not something sensible, or it could be a science project that gets shut down later. But on the other hand, if they do something that actually does work, it can get a lot of visibility and quick resources. And actually, I guess what I've seen is a lot of hunger for finding some way to get involved in the space from banks, from central banks. Ripple ran a central bank conference that brought in central bankers from all around the world. I spoke at that last year, and there was an incredible level of education and interest and excitement. Multiple central banks have done pilots. Ripple's done them with Bank of England and Saudi Arabia Central Bank. So I think there's an elevated level of interest that at least gives you, instead of just being sort of something that people are afraid of and it's relegated to like a back room, if you can do something interesting, it can also get elevated. And I think it's been an amazing success case that, Ripple has more than 100 banks signed up. They have, 70 with active commercial deployments in various stages. And then along this path, some of the ones like MoneyGram and Western Union are really interested in the crypto aspect of it. So the blockchain solution is the one that's adopted by more banks. And so that's basically becoming a competitor to SWIFT in their regions of the world where, a lot of banks are joining in, like the Saudi Arabia Central Bank is doing a trial right now. So I think that's like super exciting. It's maybe a little slower than we might have thought to bring the digital asset into it. But if you think about it, this is a very long process. The banks have to get regulatory approval. They need to work with their lawyers. They need to make sure everybody's on board. They need partners to work.
XRP is, as you know, a digital asset which was designed specifically for very, very high volume, very, very fast transacting. To be effective with a corporate treasurer, you have to really connect into the software that they use, whether it's a Kyriba, whether it's a SunGuard, SAP, Oracle, etc. So the XVIA connection software is API driven. So the idea is that we can embed this technology within tried and tested ERP, as in like the SAPs of this world, or Treasury workstations, or any app that's developed by a software provider, let's say a PSD2 benefiting software provider or a bank, to serve the corporate treasurer. And that means that the day-to-day activity that they run through, the connections back and forth with the banking system, etc., that can all be driven through this embedded API connection very smoothly. We developed XVIA from the outset to be hosted, which is another
so
very
it's intended
important
to sit on the client side.
Very important point, or even on the cloud. So the idea is if you have Kyriba in the cloud or SAP's FSN network, for example, I'm just picking a few names out. The direction of travel for software provided to corporates large and small is to put them on the cloud. The customer's experience, they'll be accessing the cloud software supporting their treasury, or let's say their finance function. Embedded in that cloud proposition is Ripple's delivery capability. We believe very strongly that as the marketplace develops into a much more interconnected world, there's an absolute powerful position for effective assets to be used in this way. And the key thing here is that you work with the regulators, with the establishment when you are bringing something new into market. So we work really closely with the world's leading regulators. The Bank of England ran a proof of concept, trialed Ripple last year, for example. And most of our corporate customers and global customers are banks, and many of the largest banks in the world. We did that on purpose because you have to work from the inside to evolve an industry. In our world, we focused on the cryptography, and we recreated an internet model. And we recreated an IP protocol, which we call ILP. And then we used that technique to create a network which is infinitely scalable, like the internet, which is kind of, working with about 120 banks around the world. And we've gone for the infrastructure, day one. And that's really brought us a very long way. The prize is, you get this right, you change everything. It's just transformational. But it's a heavy lift to get there. So we're in a good place, but it's been a hard journey. The interesting point is the real kind of carrot to really make our customers want to do this with Ripple is the impact they have on their customers. So when we try to describe the impact to the internal organization, it doesn't really fire people up because you're looking at how you can manage your costs, manage your internals. It's not the same thing as saying to a CEO they can transform how they go to market. They can change how they appeal to their customers. They can do many, many things they couldn't do beforehand. So I think it's concentrating on the end customer, the end experience that really fires people up. And if customers and banks can look at this in terms of the vision, the prize in this journey, there's much more energy than just looking in terms of a spreadsheet or an ROI and getting into some very low scale stuff. So it's worth aiming high.
I'm going to ask you the question that they all want an answer to, particularly from the two banks. How long are we talking? So before we actually see, financial institutions using blockchain technology to do processes?
Now. It's here. Yeah, our banks processed our first $1 billion this month, and since we launched, and we'll quickly do our second and third and fourth, and the network's building. Every day, people transact over Ripple, 2 seconds from Japan to Thailand, I don't know, Sweden to the USA. So the message I have is, careful with this stuff because it's real. This is not out there 5 years on. It's happening, and like frogs being boiled in water, if you're not careful, it's too late to jump, the world's moved.
Also, I think lots of times people hype it up to say, hey, can digital currencies tomorrow are going to replace the US dollar? That's not going to happen, right? It will have its own use case. And yes, it could be among the top 15, 20 basket of currencies, possible, right? But it will have its own use case for a very specific type of movement of goods where friction is very high today. But it will probably not going to replace foil payments because that are going to happen in a big lumpy, in which very high level of trust between the governments is required.
The other area that I'm also investing in is decentralized finance. So there's been a rise of decentralized financial products of derivatives or numerous things on lending. And so I'm looking at different investment opportunities there because there are different parts of the world that can really leapfrog the existing infrastructure of financial products and resources. If you want to be able to have a lending platform in other remote areas, I'm talking to one company that's focused on certain countries in Africa, and they're going to be launching a lending platform as well. And so I'm evaluating that one.
And so while we think about payments as the initial use case for Ripple, I'm thinking about what other cool products can you build that we can take our customers, take back to our customers. One of them being loans, micro loans. So if you go into parts of the emerging world, getting a $10 loan is a big deal. It's called a micro loan. And guess what? I think you can do that with blockchain in a way that you couldn't do it using the traditional system.
Oh, that's so cool.
I'm super excited about, hey, like, what are some more transformative products that we can build to some of our more emerging market that are completely underserved, or in other words, forgotten by the traditional financial world.
Another reason that we're focused on payments, a lot of the blockchain applications that I hope you're going to hear about kind of for the rest of the week, we believe they depend on payments. So trade finance, gaming, lending, smart contracts, insurance, identity, supply chain management. At the end of the day, a lot of the power of blockchain is kind of faithfully recording information that you value. And you want to make that information dynamic. You want to transfer ownership, and that's a payment. And so we believe that this Internet of Value concept, which kind of involves all these applications, really relies on having kind of a strong payments infrastructure under the hood.
What ideas would you have for, Aruba to, leapfrog into that future?
Yeah. So for me and my focus of blockchain companies, I think Aruba has a really special advantage, given that, one, you are a good size island with access to your government. Because there is a unique advantage to help develop legislation around cryptocurrencies and seeing how that adoption can actually help the economy of Aruba locally. So I think that is one huge advantage and should be part of your discussion. And even talking to Vareli and what she's working on and bringing new technologies to the island, I think it's a huge advantage to say, I want to introduce something here that will be a good test and it will have a better impact on Aruba.
Yeah, the fact that this country has a chief innovation officer and who's looking across all of these different, I'm going to say, departments and functions and the startup as well as the corporate experience to say, right, how do we bring this as an advantage?
Yes.
Yeah.
So should I go into this? There's a lot of exciting things I think that could happen here. I mean, what's really exciting is not just the fact that you guys are a good size, but you also have a good test market because of the volume of tourism. So you can have small pilots, you can learn from the mistakes earlier on, and then as you perfect your technology or your solution, then you can go and introduce it to the masses. So one thing that I'm thinking is just around how cryptocurrency can be a point of access to people arriving here and then have it transact in the island. Because what you could do is you can actually remove credit card fees entirely, which would be huge. as you do crypto to crypto transactions. And the ease of access is something that I would love to invest in, or even invite companies to come and test that out here. This is just an idea I have, and I think it's very cool, and I'm sharing it with you today. The point that you made just now on banks and financial institutions getting up to speed, I mean, there was a big announcement in the last 10 days about Fidelity setting up their custodial service for crypto. And what's nice is that all the custody services that were already spinning up, and now you have a giant like Fidelity step in and say, we're doing custodial services as well, which we all knew was coming. And so when you look at waves of technological innovation, right, there's usually a big build-up and education phase, and then there's more adoption. And we're very early on that in blockchain, but a lot of the institutions are now paying attention with how they're going to have to insert themselves with institutional investors. And I don't think consumer is that far off, but that's up to the institutions to decide, and I don't know their plans. You are a Bitcoin holder and you want to be able to pay someone in Bitcoin, and if the person's on Interledger, then you can send Bitcoin to their Interledger address, and as the payment goes through the network, it can pay out in Ethereum because that receiver prefers to be paid in Ethereum. And so we believe that interoperability across these different blockchains of layer 1 and layer 2, people are going to hold their own crypto that they prefer to hold and want to pay in what they want to pay in. And so I am looking at investing in the infrastructure, right? The heavy stuff that gives you the nice experience on top of Interledger, of people that are able to exchange these cryptocurrencies for you. And I can go and detail that further. So that's one aspect that I'm investing in. The other piece is I'm looking at applications for consumers or businesses to use that could also leverage this technology. They say, you know, I've got my own token, but I want to be paid out. I want to be able to expand my customer base and accept payments from different currencies. And we're talking to them to see how they could leverage Interledger as part of their solution. That if you have the skills, then I'm talking to people all over the world. I don't even think I'm talking to that many developers in New York. I'm talking to people in Japan, the Netherlands, which is why I'm also excited to be here. Syracuse the other day in New York, which...
There are other blockchain ecosystems out there that are very interested in security tokens. I think Algorand is looking at that. I think Stellar is looking at that. I know Ripple's looking at that as big new markets for them. And the standards are really important. Companies that are looking at enterprise applications of blockchain technology. In many ways, Ripple is one of those. Ripple's kind of a controversial company. It's a portfolio company of ours. And they're basically looking at banking enterprise applications. They're making it better, faster, cheaper to send money overseas. It's kind of a Swift 2.0 like system. And you can use it with their currency, XRP, or you could use it without it. So, and that's, you know, if you look at the Swift system, which is how banks move money across borders right now, it takes 3 to 5 days. And about 6 or 7% of those value exchanges or wires, they fail. And it's based on IBM technology from about 30 years ago. And so Ripple is actually making international payments better, faster, cheaper, and more secure. That's an enterprise application. Let's say Ripple here in San Francisco, you probably have money transmission licenses in 50 different states. You might have to deal with the California regulators. You might have to deal with FINRA, FinCEN, OFAC, SEC, DOJ, CFTC, Treasury, Federal Reserve. That's 9 or 10 regulators right there. And so it's really challenging. You know, now we see companies raising larger seed rounds because the first couple $1 million goes right to lawyers to deal or lobbyists to deal with regulators. By the way, there's fraud in the stock market. Think of Enron and Arthur Andersen and, you know, all the Wall Street bailouts that happened in 2008 with Freddie Mae and Fannie Mac and Lehman and Bear Stearns and AIG. The list goes on and on. And by the way, our taxpayer money was used to bail out those financial incumbents. Crypto companies have never accepted $1 in taxpayer money. And so there is fraud in the capital markets, the regular capital markets, the stock market, the bond market, the currency markets. I mean, one of the largest scandals that doesn't get enough play, in my view, is LIBOR. You know, the LIBOR scandal. That's basically the interest rate for most of the financial products, the credit financial products in the world, and it was rigged for years and years and years. And so fraud exists in all capital markets.
we want to have trustless bridges between Ripple and these cryptocurrencies so we can process transactions between the two. And the same goes for other ledgers that are outside of the cryptocurrency world. Like all of the existing centralized ledgers, we want to talk to those too. And so Codius, by having this architecture where contracts, smart programs don't have to be deterministic, so they can talk to any kind of API, and they support HTTPS and so on. They can talk to these things, but they can also talk to these things over here. So we have full flexibility to build smart programs and interconnect some of these things that are happening in the space.
Yeah, so speaking of smart programs interconnecting things, you could imagine tons of possibilities. One that we like talking about is imagine an open source Spotify, where rather than it just being one company that controls access to all of these different kinds of music, you could have an open marketplace where people are interacting with it and paying the artists directly. And because if it's open source, people can develop better versions of it constantly.
In principle, you can imagine any service that's out there and have an autonomous version of that. So for example, if we take something like Uber, maybe the customers are paying the drivers directly, and there's just a service which acts as a database that you can go to find the drivers. Codius came out of certain internal use cases that we needed. So things like making Gateway D more secure by having it be distributed. Things like having a wallet that is a little bit more intelligent, like that Wizard of Oz picture. So those are all things that came up from our work on Ripple, right? So we were originally thinking about adding smart contracts functionality straight into the Ripple network, but then came up with this whole idea of having it be separate and just add value to the whole ecosystem, right? Which is a much, much more attractive thing for us. One of our core company values is to be inclusive. So we want to build things that are useful for people in a variety of situations. Also, to answer your question a little bit more, there's some of our enterprise customers have already asked about Codius, so we're trying to develop some of those use cases. And we're also looking into ways to make Ripple as a network more attractive to Codius, but we don't necessarily want to share those yet, so just stay tuned for that.
Also calling all enterprises and financial institutions who want to add more automaticity to their business processes. So these kind of smart programs can hold money and can help big enterprises or small ones automate different business processes in a trustworthy way.
MoneyGram, Bank of America, Standard Chartered, and Santander. So really trying to build up a global network where they're able to move money more effectively on behalf of their customers.
Some of the work we were doing in Japan, and we now have 61 banks in Japan alone using our technologies, deploying both globally, across border, as well as domestically. And in particular, one of the third largest bank in the world by assets is a bank called MUFG. They're the parent company of Bank of Tokyo Mitsubishi. We announced them as a customer.
Visa's numbers is like the numbers to beat, 50,000 transactions per second. I think that is way, way lowballing it by many orders of magnitude. Cheap kind of home router can do something somewhere between 100,000 and 1 million packets per second. And that's just what you have at home. That's not commercial grade or anything. So when I think about packets per second, that's the way that I'm thinking about it. Payment latency and interledger, we're worried about the constraints of the speed of light. At a certain point, you can't move faster than the electrons going physically from me to you.
Going right to payment alliances, we're going to financial institutions, we're going to the Federal Reserve and central bankers. We really are trying to work this from the top down, get liquidity into the system, get cash in and cash out pathways so that it will be more useful for everyone. It's kind of surprising that we're where we are, that we're being taken seriously by central bankers, that we have banks that are using the Ripple network today to make payments between banks. Surprisingly to me, we've actually been getting an extremely positive response from everything from the Federal Reserve to small and medium-sized banks to payment consortiums. Everybody seems to recognize that the payment system is broken. We're a long way. Unfortunately, we're a long way from making these systems safe enough for mass consumer direct use.
Right.
If I had to guess, I would say the fastest would be 2 to 3 years, which is really not that long.
No.
Yeah, technology moves very, very quickly.
Like Bank of America, are they open to Ripple right now? And if they are, or when they are eventually, how can Bank of America use Ripple right now today?
They are surprisingly open. That's another one of the things that really surprised me, because you kind of think of the existing financial system as perfect for banks and banks not wanting to disrupt a system that works well for them. But actually, banks have huge problems in payments.
In India, when I first started selling there, they said, what does the Reserve Bank of India think about Ripple? And I said, well, why are you asking me? Why aren't you going to ask the central bank? They said, no, we can't do anything unless the RBI is going to be approving of it. So, of course, we spent time with the RBI. And I said, yes, this is technology between banks. Go for your life.
And working within a regulatory limits,
as defined by the Reserve Bank of India.
But then we realized that if you get the top 3 banks in India onto Ripple, you get 80% of the market share. And then we looked at where's the future. And so we realized in the next 5 years, 1 billion new people will become banked in India, but they'll be banked through their phone. So then we started targeting mobile phones, providers, and telcos. And so now I think that, in our pipeline, we have probably 50% of the market in India either integrated onto Ripple or, in the deal, in the sort of pipeline to be signed to India.
Xcurrent is a product which we are implementing with all the banks in India, and it fulfills the regulatory limits of the Reserve Bank of India.
Well, in markets like India, there is no use of digital assets. And we have a number of banks who are live. Axis Bank is live, IndusInd is live, Kotak is live, Yes Bank is live, Federal Bank is live. And every day we are delivering on a BAU basis, making remittances transparent, making remittances fast, almost instant in terms of real time, and making them transparent and making them reducing the cost of errors that were earlier in place without use of any digital assets. So the tech already works, right? Now, in terms of the next step for Indian government to consider potential use of digital assets, there is a lot of work to do, right? So we are already working with, for example, the enabling provision in Philippines, in Mexico, where the number of immigrants are similar to like in India, right? So maybe at some point, once we prove large and in a very stable manner use cases in other countries, we'll take our findings to institutions in India and essentially show them. And then it's for the Indian government to decide.
India has started this notion of a sandbox, and you were part of the organization NPCI which pushed for that, and now we have a flourishing payment ecosystem which has taken